Good morning. All right, let's get ready for the opening bell. We're down about 20 handles at the moment. Futures are down. I'm your host, Cousin Betting, coming to you from theclosingprint.com. It is Friday, March 20. Got about 8 minutes to go. 8 minutes to go. Watching for some of these stocks that we looked at. Some of you may have gotten long or have been long for a while, like Applied Materials, which is going to benefit from the CapEx spending, Micron spending. Okay, so here's Micron and Applied Materials. Applied Materials had a nice bounce yesterday. AMAT, Applied Materials. Okay, Lam Research, LRCX. That also bounced. All right, so these two in particular, Applied Materials and LRCX, will benefit, have been highlighted to benefit. All right, let's see. Futures are starting to rise a bit. As we mentioned yesterday, I won't be doing a whole lot. Scalping, of course, but new positions, maybe add to some things that continue to trend, like Applied Materials or LRCX, if you have those. The oil and gas stocks, let's see what they're doing this morning. Oil and gas. Okay, Exxon is up a little bit pre-market. It's in the wick. It's in yesterday's wick. The energy stocks probably keep going. Maybe if you think we're getting a bit overbought, you could sell covered calls up here as well. Chevron, ConocoPhillips, ExxonMobil, Apache. All of these stocks are continuing. They're getting a little extended. So if you want to stick with the trade, maybe you sell, a dollar out of the money. Maybe next week or the week after calls. Sell some covered calls. If it does pull back in a little bit, just cover the covered calls, buy them back. Let's see. Yesterday wise, what do we have? It's strength and energy again. Semiconductors looked okay. All right. Retail, I did note that retail was starting to turn. Okay, if you look at the daily retail, okay, that might be an opportunity there. I would watch volume. Volume needs to do what it did yesterday. Retail, look at the 60-minute time frame. Just starting to turn the corner. Okay, Apple is up right now. Apple's starting to move. Apple needs to get back above the 20 EMA on the 60-minute. NVIDIA, same thing. NVIDIA is trying to move right now. There goes Tesla. Tesla. All right, coming into the opening bell. We got 5 minutes to go. 5 minutes to go. All right. Four minutes. Apple, pop, Apple, Microsoft, NVIDIA, Netflix, Tesla, Amazon, Google. Okay, all the New York FANGs are seeing short covering. Short covering. Okay, these are all starting to turn back up into the opening bell. First 15 minutes, as usual, we'll be taking profits off the table, reassessing the markets. Okay, we got 1 minute to go. 1 minute to go. Futures are starting to rise. Okay. He was really late with gamma updates, so I'll just look at this real quick. Okay, we got a big OPEX today. A lot of calls, of course. Respect the potential for a strong OPEX bid here. We're not looking for a bottom until crude oil starts to back off. Okay, this looks good. $64.75 is a dominant strike down there. That's a JP Morgan. Collar, the puts. Buyer put spread, sell calls overhead to finance. All right, we are open. Okay, let's see. Down volume is leading for the time being. Futures pulling back a bit. Let's go to trace. Okay. All right, let me just post this in a gamma update. Okay. Okay, watching hedge flows 0 day. See if anything builds to start. Okay, all the New York fangs turn back down. A little profit taking. We need to see gold back. We need to see crude back off to get any sort of a bottom in the markets, it seems. Okay. Okay, Micron pulling back a little bit. Micron. Swarmer's down to 50. Oracle's down to 152. Oracle's inside day for now. Oracle. Okay, FLY. Looking for that to follow through. Aerospace. Fly. Firefly. Aerospace gapping up. Okay, finally gapping up. Firefly. Forget who mentioned that. I know Frano's been talking about it too. Fly. Nice gap. And go. All right, I posted the summary, gamma summary. Let's just keep an eye on this for now. S&P. Tesla just dropped off. Okay, so nothing there on Tesla. Okay, Tesla just dropped. All the New York fangs just dropped off. Okay, where's crude oil? Okay, here's Firefly. Firefly gapping up. Okay, looking for that to start to build the right side of this pattern. Firefly. The May 30 call was pretty active on Firefly. Let's see. Firefly. Let me just take a look at this real quick. Let's see where the volume is. Firefly. FLY. May. April. May. Okay. The 25-30 looks like it's a spread. 25-30. Firefly. Buying the 25, selling the 30. There's a lot of open interest there. There's also open interest at 35 for May. Firefly. Let's see what August looks like. August. Open interest at 25 in August. September. Okay, not a whole lot there. Firefly. Let's see what April looks like. April. Okay, there's a lot of open interest at 30. April 32. Okay, S&P continues to pull back. So did Tesla. All right, Tesla just lost it. The 200-day continues to move lower. No catalyst to push it back up. All the New York banks are off. ExxonMobil on the move. ExxonMobil, energy stocks, continuation, energy. All right, let's see what Chevron looks like. Chevron moving higher. ConocoPhillips. Okay. These are getting hot. They've been hot for a while. Chevron, ExxonMobil, ConocoPhillips. Let's see, Phillips 66. Let's see what some of the refiners look like. Um, Valero, Schlumberger, SLB. Okay, that's down. Devon Energy, Apache. Okay, Apache's still going. That's the best performance we've seen in Apache in years. This January move through end of March, looking really good on Apache, APA. Supermicro, what can they do? What can they do? Can they do anything about um, taking over the company? Oh, this looks terrible. Wow. Supermicro I guess a investigation into selling chips, smuggling chips to China, Nvidia chips. TSSI, I would think would benefit. What do you think, Mondo? Should they benefit? I would think. Okay, future's starting to bounce. Let's keep an eye on hedge flows. Okay, nothing new. It's a Friday. It's an OPEX, quad witching. OPEX happens 4 times a year. Quad witching today. Okay, for March. And just watching hedge flows here. We're off 34 handles. Let's see what crude oil looks like. USO, crude oil. Okay, that's not making any progress. West Texas, West Texas yesterday closed. All right, just look at this. West Texas feels like it's topping out. Physical crude versus futures, two different things. I've been reading somewhere. I thought that physical was much higher, so Brent and West Texas should catch up. All right, ExxonMobil still going. Oracle's down. I wouldn't make much of the open right now. It is an OPEX. Okay, we got quad witching. All right. We got stock index futures for S&P 500 or the Nasdaq 100 futures. You got the stock index options also today, stock options and single stock futures. Less common in the US, but it's part of the global. So, I mean, some people call it triple, it's quad. You get volume. Okay. It's often one of the highest volume trading days of the quarter. Okay. So, this move to the downside right now, just watch. Not doing anything at the moment. Want to see institutions buying. Okay. So, this happens 4 times a year, March 20th, June 19th, September 18th, and December 18th for Q4. All right, Apple, there's some pretty big volume in Apple puts, 260 puts for today's expiration. Okay, so those are in the money, 85,000 contracts. NVIDIA, seeing some heavy penning action around 180, 185. The 182.50 calls and the 180 puts are among the most active. So NVIDIA, Meta, a massive block of 650 puts, 114,000 contracts traded today. Okay, Meta. Let me just take a look at that. Meta. Not doing anything right now. It's the first 15 minutes, first half an hour, really. I don't do much. I just want to analyze the market and see what's going on, where we might be headed. We know that we're going to get high volume. Okay, hedge flows. We can get some wild swings today too, so be careful. Personally, I'm looking for a base to form. You know, that's a lot to ask for with the S&P 500, but that's what I'm looking for. Okay, that's what I'm looking for. All right, so here's the S&P for now. S&P. Okay, does it build something here? Or we've had 3 strikes against this level, including this one. One back in October, one in November. We bounced off of this area. We made a new high, new all-time high, came back down to the area. So this is the third time we've been at the 65.50 zone. 64.57 is that JP Morgan collar. Okay. 64.75. I keep saying 64.57. I get these backwards. 64.75 is the big strike that expires on 331. 331, that needs to roll out. Okay, that'll roll out. So, yeah. All right, we're starting to see a little bounce. Not going to bite. Not going to bite initially. Looks like we could bounce a little bit. What I'm interested in is what was working yesterday. Okay, so we had Micron bounce. Okay, Micron buyers are stepping up. Okay, if you caught what I posted yesterday with Micron, and you just look at the numbers. Okay, a conservative 15 times would be a good target for Micron. Okay, for this year, they're looking at earnings. They're looking at earnings of $37.75 for this year, 2026. 37.75. What did they have last year? $8. $8. So we're an improvement of 355% if estimates continue to confirm what we saw in earnings from Micron. Okay, so 37.75, 15 times earnings, that gives you a target of roughly 566 by year end. 566. Okay. Now, that's not even aggressive. If we were aggressive on Micron and we use like 20 times or 22 times, uh, considering an AI infrastructure play similar to NVIDIA and Broadcom, that target is about $755 to $830 by the end of the year. That's using my calculations and the earnings that were posted for the year estimates. Okay, so we're a long ways away from that. So even if you use the conservative estimate, 566 is the end of year number. Okay, so I could see this moving higher. Now, what happens if that is the case? Well, we're gonna have to look at stocks like Applied Materials, which will benefit from the capex, Micron capex they're spending on products and services from Applied Materials and Lam Research. Okay, Lam Research. So let's say you're thinking about swing trades. I mentioned this one yesterday because these bounced looked really good. They were already trending. And if you just look at this dip back to the 50-day, they quickly stepped up and bought shares above average volume. MACD is turning, stochastics is rising, RSI is pushing higher. Now, short of a guarantee, which we don't do here, we don't know what institutions will do. Short of a guarantee, I would think that Lam Research and Applied Materials continue to move higher. Now we could chase after energy stocks. You could do that too, right? ExxonMobil. But this was something we were looking at, over a week ago. ExxonMobil, the squeeze. We talked about the squeeze, how it would probably follow through and push higher. RSI continues to predict higher. Chevron, we've been doing this since January, and all we keep doing is rolling our spreads up. 155, 150, 155 was the first, and we just kept doing that. I sold the rest of what I had recently, looking at 200 205s or 200 210s, 200 210s for Chevron. Now you could do that too. Let's see what's actually working right now. What I wouldn't do is hurry into the market. I wouldn't do that. Now Dell's probably going to catch a bid. It's at resistance right now. I wouldn't chase it right now. I'd be looking for an ABCD pattern. Okay, it's way extended from the 60-minute. So if you just use these strategies together, your best entry would be somewhere near 157, unless the 20 EMA catches up and it bases up here. Okay, Dell, Applied Materials, same thing. Okay, it's riding the 20 EMA. So this is a pretty decent entry area. Lam Research, same thing. Okay. Patchy. All right, that one pull back a little bit. I would not be in a hurry. This is the one thing I would not do is be in a hurry. We need to see this base. Maybe today we get back above the 200-day. Maybe today is that day. We still need to see if we go to non-zero day, we still need to see all the volume down below fill in. Okay. Let's go to open interest, net open interest. There's a little down here. Okay. There's a little down here north, south of 65.50. Okay. Reiterating, what I would not do is race into the market right now thinking that you're going to catch the bottom. We don't know that this is the bottom. What has to happen is crude oil needs to back off. Okay, crude oil needs to back off. If we get a big down day, it looked like we're going to a big down day yesterday, right? Towards the end of the day, crude oil futures had dropped off yesterday. Towards the end of the day, you saw that. yesterday. Let me go to the 5 minute. 5 minute. Yeah, towards the end of the day, we had crude oil drop off like this. We need to do that. We need to see that move more lower again. Need crude oil to back off, roll over. Okay. We need crude oil to roll over. We need this to roll over. Okay. I don't see that happening right now. Best case scenario, we're going to base up here and maybe lose it at some point because people get frustrated. They don't want to stay in the trade if it doesn't take out the upside. Could go either way. So right now, I'm not doing anything. On a long side with the respect to the S&P, I told you that if we got down to the low, let's go look at one of our indicators here. Okay, let's be slow and methodical about this right now because we have given back almost 7%, 6.5, 7%. Okay, so it looked like this was going to hook up and it turned back down. So the number of stocks above the 20-day have dropped off a little more. Okay, so if you didn't do anything on S&P, you're okay because we just dropped off again. We're so close. We're so close. People are itching to put money to work. I think you're going to regret it if you just wait. Just wait a bit. If you're day trading, you know what to look for. Energy is probably going to continue. Okay, so here is that support just below. Okay, this didn't work out. Okay, looks like we're going to move lower. Last time this happened back in April, okay, people were sucking wind for weeks and weeks. And then they turned on the afterburner and the stock market just ripped in the other direction. Okay, that was a good buy signal down here. That's what we're looking for right there. Same thing that happened in April is setting up right now. This was a lot faster, of course, but even with the slow grind, we're almost there. When we get a washout low, the number of stocks that are trading below the 20 and below the 50-day get down to this level. While it's not a guarantee, it's a pretty high probability that if you start trades like SPXL, which is what I plan to do, I plan on buying some SPXL. I'll buy it for my kids. I'll buy it for our trading and investment accounts. Microsoft has dropped off. Apple just bounced. Apple. I wouldn't be in a hurry. Apple looks good. Bouncing. Okay, crude oil needs to roll over. So if you're just buying the S&P because you think it's oversold, think again. Crude oil needs to roll over. That's what's been driving the market right now. Lately, the last what has it been? 3 weeks now? Was it day 20? Okay. I keep thinking to myself, maybe today's the day. They keep killing people. Every time a leader steps up to the podium, you know you're next. But, you're dealing with fanatics. Fanatics in the sense that they believe what they believe. They don't mind going to heaven and get however many virgins there are waiting for them. It's just a different way of thinking. So I'm just waiting on the markets. I'm not in a big hurry. I'm your host, Cousin Benny, coming to you from theclosingprint.com. It is Friday the 20th. Quad witching, index futures, index options, stock futures in some cases, ADRs. Let's see what's happening here. NVIDIA is still pulling back. All right, the New York Fangs don't look good. Okay, we're telling you the New York Fang needs to help out too. Okay, that rolled over. Pretty obvious that you shouldn't be buying the dip right now. Yes, Apple is bucking the trend. Apple is bucking the trend right now. It's sitting on the 200-day. So, you could buy Apple here for a scalp, right? If you're going to scalp Apple, okay. So I got a couple of questions last night. Difficult market to trade. Absolutely. If you're going to trade Apple, use use the RSI. David, I was telling you this as well. Look, you see how RSI was oversold? You see where Apple was at 246. So if you had seen RSI starting to turn up, you put a stop underneath the low here. We blast 2 points higher. You take a 50 delta call. You just made $100 per call. 5 calls, $500. You're done for the day. $500 a day. That's $10,000 a month. Pretty straightforward. Now, obviously, this is in hindsight, but this is what I'd be trading. I'd be using RSI, 1 minute chart. Watch for the bottom. Let's see if we can get another example. Let's get an example. Let's see. Broadcom pulled back. Okay. What about Applied Materials? Okay, these are pulling back right now. Okay, so you're waiting for RSI to get oversold first. Prices are already pulling back. Now watch for a bounce here. Okay, so this might be a scalp to set up right here. So you buy 50 delta calls or 40 delta calls, close enough. One good trade, you're out for the day. You make $500, that's $10,000 a month. $500 a day. What else? LRCX. Okay, ARM Holdings. ARM is on the move this morning. ARM gapped up. It's pulling back a bit. Okay, what's Palantir doing? Palantir. Okay, oversold. Palantir might bounce. Okay, I'd be using the 1 minute chart here as well if you're going to scalp. Market needs to get a bounce first. Market needs to bounce. SPY oversold. SPY oversold. Okay, back to Apple. Okay, so a little profit taken there. Apple. What is Bitcoin doing? Bitcoin pulling back. All right, so BITX. Let's see. BITX. Nope. No, look at the 60-minute. All right, so this is a gradual uptrend. We did pull back a little bit, so Bitcoin's not giving you a good signal yet, so I wouldn't be doing anything with Bitcoin. Okay, here's the Bitcoin. Let's look at the daily. Okay, so yesterday we told you that, and the last few days we've been telling you, we pulled back for 4 days the last time. First week of March, we pulled back 4 days, and then we rallied for 9 trading days. Okay, this is day 4. Do we fade again and then rally next week? OPEX out of the way. Yeah. You got to see crude oil back off. Okay, so we need to see crude back off. Let's see what USO looks like. USO hanging in there. VIX needs to back off. Okay, VIX needs to back off. Okay, VIX is strong. Okay, VIX is turning up. Futures pulling back more. S&P 500. Okay, we're testing and below yesterday's low now. I imagine there's a lot of people in disbelief thinking, oh, at the 200-day, I was told the 200-day is the place to look for prices. It didn't stop on Wednesday. Thursday, we gapped down. We tested a new low. Today, we're testing that low from yesterday. People are probably saying, oh, okay, don't cross this line. In this case, we just keep crossing that line. You pull the line back a little bit more. Don't cross this line. Crude oil needs to bounce, folks. Crude oil. Crude oil needs to back off, I should say, before S&P can bounce. Crude oil's not backing off inside day. So what do? If you absolutely must trade, you need to look at the most active stocks. Look at Dell. All right, so let's look at Dell. Okay, if I want to scalp Dell, what do I want to do? I want to enable the 1-minute chart. I want to watch RSI. And if this starts to get a bid here and RSI turns up, I can put a stop underneath 162.50. Okay, that's how I would scalp this. All right, this is Dell. Okay, this is the 1-minute chart. If you absolutely must trade, use a 1-minute chart. Okay. I would prefer, in this case, I would prefer this to get oversold again because Dell's probably going to maintain a bid today. Buyers will probably step up at some point. What's happening right now is you got people that were long yesterday taking profits today. And as this moves lower, more and more people take profits. At some point, the profits will be finished. People will be finished taking profits and we'll get a bounce, I would think. Dell looks pretty good. Okay, Dell. What else? Oak. Oak is breaking out. Oak. All right, so look at the 1-minute chart. 1-minute chart, you can't buy it up here. Can't scalp that right there. What else? AT&T. Okay, the Vonage. Vonage got an upgrade. Remember Vonage? That's continuing. Vonage probably follows through. Look at the 1-minute. Overbought. People taking profits. Now is not the time to do anything. Let's see. AT&T. Okay, that's at the high. You don't want to do anything there either. Okay. You see this bullish and you go, oh man, I got to jump into this. Don't do it yet. Don't do it right now. Wait for the RSI to back off a little bit like it did here into the close yesterday. You had a nice open. Okay, 27.85. Okay, not quite $1 yet. Okay. But that would work. Let's see what else. Oxy. So David, you asked me, what do I do in the first 30 minutes? First 30 minutes, I check these out. If I'm not talking about something else like I was for the last 20 minutes about looking for a bounce in crude oil, what I do is I always look at the top 10. Okay. FedEx had earnings, right? FedEx pulling back. All right, this might be a scalp. Didn't get down far enough. I want to see RSI down here minus 30 or back to 30 and then get it to turn up. This is probably going to turn up anyway. People took profits, looking for this to turn back up. Watch that RSI. Okay. What else? Let's see. Occidental Petroleum keeps going. All the energy stocks look good. FedEx we just talked about. Apache already talked about. Exxon talked about. Chipotle. Chipotle's coming off the low. Okay. So this might trend today if it stays above 50 RSI. All right. So the next time it dips down to the moving averages, this is the 1-minute chart. These are the moving averages I have on here, 10, 20, and 100. Okay. It's a 1-minute chart. This is trending. So any dip back to 33.36 or 33.40, whatever, and RSI keeps pushing higher, that's probably going to continue. Quick profits this morning. That's the way I would read it for now. Chipotle, let's see what's on the Dow Jones. Dow Jones, Verizon. Okay, let's look at Verizon, VZ. A lot of these have already popped. Okay, you can see RSI is overbought. What else? Goldman Sachs, Chevron, United Health, nope. Procter and Gamble, maybe. Disney, I don't see anything to go after right now. There's a few things that are oversold. Merck, no. Amgen, no. Let's see, NASDAQ. Anything I recognize here? NASDAQ. Roma. What's Roma? Roma Green Financial. Let's look at the 1 minute chart. Nah, that's just too thinly traded. There's no candles on here. Okay, let's look at the NASDAQ 100 ARM Holdings, ARM, ARM Holdings. Okay, this is fading. ARM. Okay, let's see. ARM. What's going on? Colgate. I'm sorry. Crude oil. Crude oil is still hanging in there. Futures. USO. USO. Okay, we're starting to bounce a little bit. Crude oil is starting to back off a little bit. Watch the hedge flows. I'll stay on this for a minute. I'll just talk through some other stocks. Okay. Thank you, Cayman. Thanks for the script. Cayman's scripts. Okay. Okay. Just watching hedge flows. Anything new here? Let me just go here. Anything new? Let me just go back to the open. Open. I don't see anything big here. Nothing big. All right. So this has been pretty much the same this week. Don't see really big trades the first hour or so on 0 day. Okay. At some point, you would think they're going to sell some premium. Would see look for that to show up as a big bar, a big horizontal bar, purple or red or both. Okay. Apple backed off. S&P looks like a bear flag. Oracle pulling back, or Micron looking for a bounce in Micron. Oracle. Swarmer starting to move higher. Swarmer. Okay. Okay. Okay, futures just sitting there. We're just watching futures. Mhm.
Low tick alert minus
All right,
800.
more low ticks. So we're just sitting waiting. You can sense people are just stepping back and waiting for the markets to stop dropping. Okay, Swarmer continues to move higher if you're scalping. Just waiting. Continue to sell here.
Low tick alert minus 800.
Futures still drifting lower. Okay, we're starting to see some short covering on the New York Fangs for now. Wow, that's crazy. Oh, wow, Chuck Norris is done? Oh, wow, that sucks. Chuck Norris. You know, it's funny when I was in the Navy, he had a studio. He had studios all around the country, Chuck Norris Studios, and he would I could obviously hire taekwondo instructors to manage his studios for him. But I took taekwondo taekwondo back in the day. Wow, that's crazy. He's gone. Yeah, him and Bruce Lee, Chuck Norris and Bruce Lee. Okay. Yeah, it's unfortunate. We're born and then we die. If you don't learn how to be a good person or enjoy life during the time that you're here, you know, shame on you. Sometimes we don't have a choice, I guess. Yeah, same thing here, Frano. Frano, that one's doing really well. Swarmer's still going. Swarmer. Let's take a look at Swarmer. SWMR. I'm just watching crude oil. SWMR. Swarmer. SWMR. Sorry if I killed your eyes here. Okay, Swarmer. Okay. Let's see if this can get back up to the highs over here from yesterday.
Low tick alert minus 800.
Okay. Crude oil must move lower. Yeah, crude oil and VIX, those two must pull back. All right. So until that happens, we're just going to keep doing this. So don't put money to work unless you're day trading. Okay. Swarmer. Okay, what's Oracle doing here? Oracle. Oh boy, it's going to be one of those days again. Looks like we should see some pretty decent volatility right now. The drop proceeds unabated. Palantir pull back. This is what, day 13 on Palantir. Palantir. I'm surprised it's holding up as well as it is. Okay, this could easily roll over, get some more people to sell. Looks like institutions were picking up shares over the last 3 weeks. It did taper off a little bit. Palantir, if you're trading Palantir. Okay, so if this dips down to the 21 day, I wouldn't be too freaked out. If this starts to drop more precipitously and the volume picks up like it did back in February, then I'd be more concerned. But this is holding up really well for 13 days. So, yeah, there's that. Bitcoin, still nothing. Bitcoin. Okay, so keep monitoring. If you have it, keep monitoring the number of stocks trading above the 20 day. Just because it gets into the green zone doesn't mean it's a time to buy. We want to see the turn. We saw that earlier in the week, and that didn't follow through. Okay, so let's go look at that. While we're waiting, biding our time, waiting. No hurry here. Let's see. Okay, number of stocks above the 20 day. All right, we're touching the green zone. This is subjective. I could have pulled this back to 10%. Okay, think about that for a second. You've got what? 87%. 87% of stocks are below their 20 day. 87%. 77% are below their 50 day. 77%. Okay, where do you think institutions are buying? They'll be buying down here. Okay, they'll be buying soon. It's just they haven't done it yet. They're probably waiting for the same thing we're waiting for. Crude oil, waiting for crude oil to turn back down. We need some more developments out of the Middle East, Straits of Hormuz. Taking over some of the islands. I don't know, whatever what is we need. Um, push this back up. Personally, if I wasn't broadcasting, I'd be out enjoying the day. This morning, I had to take some garden clippings. I have this gigantic agave plant in my front yard that just gets crazy. These things grow to be like 10, 15 feet tall. Mine's right now is about 6 feet tall. So I've been trimming that. And the leaves themselves, they're like planks of wood. They're so big. So I had to drop that off this morning. Long story short, it was beautiful out. Beautiful this morning. There's nobody on the road. It was like 6:30 in the morning. And I just thought to myself, man, if I wasn't trading today, I'd be at the beach. I'd be doing something. It's a little cold out, but I'd be doing something besides staring at the market, you know? And I also thought to myself, all these people going back and forth, clueless to what's going on in the stock market. I promise you, most people. So if you got yourself emotionally involved in the markets right now, just understand we will turn. We're getting very, very close to a turn. So if you can't stand staring at the screen and watch the markets pull back, close your eyes, take a ride, go do something, push away from the screen. If you're day trading, okay, I understand. If you're day trading, let's take a look at some day trades because that's why you're here, right? You want to day trade too? All right, let's look at Microsoft. Okay, Microsoft just got oversold. Remember what I told you before, David? See how Microsoft got oversold? We're making higher lows. We made lower lows on RSI. So that told you right there you had a bullish divergence. Okay, RSI is rising. Prices diverged. Once we started to see a turn, you could put a stop underneath this level. You might have thought, well, maybe that was the place right there, right? Maybe that was the place to buy, and you got stopped out. This obviously in hindsight This is what you look for. Now we got this run up higher. So if you want to day trade, if you absolutely have to day trade, this is what I'd be looking for. Let's see some others. What's turning right now? Apple turned back up. Apple was overbought. RSI dipped back in again. So we had these little scalps you could have taken with Apple. Netflix, same thing. Okay, you made a lower low. You made a higher low on RSI. So this turn, obviously valid. So this is what I look for. I would check out the most active stocks, first 30 minutes, first 45 minutes, watch these stocks to see what happens. And this is what I would trade. If I got a day trade on a day like today, this is what I'd be doing. All right, watch Disney. Let's see what Disney looks like. Disney. Okay, that's already, doesn't look that great. Let's see the top 10. Top 10. Let's see. Dell. We talked about Dell a few minutes ago. Dell, just flat. Okay, RSI is flat. Nobody's trading it right now. Gapped up, they took profits. ARM Holdings was up. That's dropping some more. ARM Holdings. Okay, people took profits, backed off. What's going on with ARM anyway? ARM. Earnings Whisper's not working for some reason. Let me try a different computer. If you absolutely must trade in your day trading, check out RSI. And on your 1 minute chart. Okay. Yeah, I don't know what's going on with ARM Holdings. Swarmer just turned back down a little bit. Swarmer. Oh, that's another one. Let's check out Swarmer here. Swarmer, SWMR. Okay, 1 minute chart. Wait for it to get oversold again. Wait for it to get oversold. You could also enable MACD. Between MACD and RSI, that sets up a good trade on a 1 minute chart for scalping. Swarmer pulling back now. Okay, Oracle. What's Oracle doing? Oracle. Okay, Oracle somewhat over. Okay, we're making lower lows here. Oracle making higher lows in RSI. So that's telling you we're probably going to see something pretty soon on Oracle. Okay, I'm going to timestamp this. Okay, you got higher lows and you got lower lows on price. Okay, we just made a higher low there. Okay, let's see if this goes. I'm going to hold, actually. Okay, looking for turn 10:30. Today's the 20th. Okay, we'll come back to this in a minute. All right. Yes. Okay, we'll come back and watch Oracle. If you're gonna trade Oracle, watch that one. S&P. All right, the hedge flows continue to make lower lows and lower highs. No trend. The trend is down for now. Yeah, why would you force yourself to sit here and watch this if you don't have to? Crude oil. Okay, let's go take a look at crude oil. Okay. Okay, here we go. Watch Oracle here. Watch Oracle. If you're going to scalp this, watch it right here. Oracle right here. Okay, watch an Oracle here. Let's see if this goes 149.50. Let's see. Watch this one. Should go. Should push a bit higher. All right, 150. Oracle, 149, 149, 80, we'll say, 149.80. Okay, RSI rising. What's MACD doing? MACD's rising, that's good. Okay. Okay, 150.28. All right, 50 delta call. You make a 2-point move. That's $100. Okay, so you have 5 of those calls. That's $500. $500 a day. Average during the week. That's $10,000 a month. Okay, so if you just look at that one criteria, you got RSI on your 1-minute chart. You're looking for 2 points. Okay, you should be able to see 2 points out of this one. Okay. Okay. And we said price entry of 149.80, 149.80. $149.80. Okay, here we go. Here we go. So, David, if you're watching this, or if you didn't catch what I was saying, keep an eye on this. You got lower lows. You got a positive divergence, RSI, positive divergence. Okay, let me just put that on the. Put that on the chart as well. Okay. Ah, shoot. I hate when I do that. Click too fast. Look for positive. Okay. All right, so that's almost $1 already. Okay, RSI is turning up. Okay, well, we'll come back to this in a second. Let's look at the S&P. I see you guys talking about the S&P. S&P. Okay, so we got to look at RSI. Okay, there you go. RSI turning up. Same thing with RSI. Slight divergence here. There's a slight divergence. Bullish divergence. Okay. RSI rising. Stop. All right. So if you have to trade, this is what you're looking for. Okay. So you got that slightly positive divergence. Your price is moving up now. 65.56. Let's see how far we go with that. 65.57. All right, let's go 65.58. All right, so Nick, were you in? You're in the S&P. Okay, your long call 65.55. Okay. 65.59. RSI is still rising. You can see that right there, RSI. Okay, so you know your trade's working. 65.60. Cool. $65.58. All right, a little profit taking looks like there. RSI is still rising. Okay, going to go back to Oracle. Oracle starting to flag a bit. Okay, Oracle. Future still rising. Hey, kitty cat. Came to visit me? Hmm? Hi. Sweetie. Okay. All right, so that's that. All right, S&P. S&P also. Okay, hit 65.60. Coming back in a little bit. Okay, RSI. Looking for a higher low, higher high. Okay, get back. Somebody taking some profits there. Oracle. Oracle. We'll come back to this in a minute. What else is working here? Let's see. ARM Holdings. ARM Holdings. Sorry. ARM Holdings. Okay, we're turning back down. Oracle, look for that to turn up. It's still basing. It's been quite a while. All of February, nearly all of March. Oracle still basing, even after earnings. All right, this is what, day 8 after earnings. Fade. S&P just faded as well. Oracle fading a bit. SPY. SPY right back down. That was a quick fade. Let's see if we get a bounce here, S&P. S&P spiders. What's hedge flows doing? Hedge flows turned up a bit. Hedge flows did turn up as well. We should see a lot of volume today, and I would expect more volatility than this. So we've already made a snap lower. We're down 57 handles. We were off, what, 60 there at one point? 60 handles. Can we see a move back up, 10, 20 handles? I'm thinking we could. Okay, looking for a higher low. Oracle looking for higher highs. Let's see. What's Micron doing? Micron is down 3%. Micron inside day for now. Micron. Bitcoin still waiting for that bounce. We got 4 days down, similar to the last time. Looking for a higher high. Okay, let's see. Need to see that crude oil drop off. Crude oil, USO, crude oil. It's still moving higher. Crude oil's popping. That's not going to help. Crude oil popping. Oh boy. What's RDDT? Reddit? RDDT. Okay. Watch Reddit potential basing here. Okay, Reddit again. A scalp. If you're scalping. Check out the 1 minute charts like this one, RDDT. Okay, that had a nice run up. Okay, so I guess you could say this is a divergence from yesterday, bullish divergence, a higher low. We started making higher lows to start the day. Prices just kind of stopped here. Joe K talking about Reddit. Reddit ripped back up to the upside. Okay, so that one's done for now. Okay, let's back to Apple. Let's take a look at Apple. Okay, higher lows. Looks like it's in a range. I don't want to try that one. Palantir. Let's see what Palantir is doing. Palantir. Okay, Palantir making higher lows to start the day, lower lows in price action. Lower lows in price action. Okay, so this is what I'm looking at. RSI is rising, higher lows, price action, lower lows. Watch for the reversal. Price moves above the moving averages. RSI starts rising. Nice little scalp there. 150.75. It's a buck, a little buck 10 cents, buck 20 cents right now. Okay, Palantir looking better. So if you're going to scalp intraday or you're thinking about buying something, check out where RSI is and what price action is doing at the time. If our RSI got oversold and it's turning up, maybe you got a nice little trade there. Let's see what else is going on here. Adobe, ARM Holdings. ARM Holdings, RSI rising. ARM Holdings. S&P still pulling back. S&P. It's going to take a lot of stocks with it. Tesla. Let's see what Tesla looks like. All right, so Tesla, again, here you go. You see the setup? Should be pretty obvious. Okay, you've got higher lows, RSI. You got lower lows in price. You got a bullish diversion once it moves above the moving averages here. You also have MACD turning up. All right, so 371, 373, that's $2 right there. Let's see how far this goes. Futures are pulling back, so that's not going to help. Tesla. Micron pulling back more. Micron's testing yesterday's low. Micron pulling back. Crude oil moving higher. What's VIX doing? VIX at the highs of the day right now, 26. VIX. Crude oil fund moving higher, 120.73. Crude oil futures moving higher. Crude oil, that needs to pull back in. It's still basing, I guess, at the highs. This needs to roll over to get the S&P to turn back up.
Low tick alert minus 800.
All right, we just made a new low. Crude oil made a new high. Bitcoin turning back down.
Extreme low tick alert.
All right, we just dropped off some more. Crude oil still going. Intraday crude oil looks like it's on a move. On the daily, you can see that we're still below 100. The USO fund, crude oil futures rather. All right, a little reversal there. Crude oil still moving. Apple is at the high. Apple at the high. Apple's sitting on the 200-day, so my guess is that at a minimum, we need to see this base in this area. We need to see a base in this area. Tesla did the same thing, right? It based at the 200-day, didn't follow through. Instead, it dropped off. Okay, so you have to be careful with this. A lot of these stocks are at the 200-day, could drop more. Here, what's the Meta doing? Meta below both the 50 and the 200-day. Meta's still going lower today. Apple, like I said, Apple sitting there on top of the 200-day. maybe for a day trade. Oh boy. If you're just joining us, I'm your host, Cousin Benny, coming to you from theclosingprint.com. It is a beautiful Friday outside, March the 20th. We're coming into the 11 o'clock hour. Traders just sitting back, waiting for crude oil to back off. Doesn't look like that's going to happen today. So we can expect to see more volatility. It is quad witching OPEX. All right, what's we doing here? Apple. S&P still sitting here at the low. S&P. Yep, that's true. MACD's trying to turn here. 5-minute chart, MACD's trying to cross. Palantir trying to turn up. Micron nearing yesterday's low. All right, hedge flow is starting to rise again. S&P, watching MACD and RSI turning. All right, MACD trying to turn, RSI trying to turn. We're watching S&P 500 Hedge flows starting to make a higher high here. Hedge flows. Market's not moving. Let's see what up down volume says. I would expect it not to say much. It's 5-1 down on the Qs, 3-1 down on the SPY, 3-1 down on the NASDAQ Composite, 3-1 down on the New York Stock Exchange, 3-1 down on the IWM, 5-1 down on the Dow Industrials. Markets are not giving us any signals other than more fade possible. Bitcoin making a lower low right now. Bitcoin. Watching the S&P here for a potential turn. MACD's turning up.
supply chain pressures that have to just drift into and bleed into, if, first probably margin expectations, and then potentially, if this drags on a lot, to demand destruction and a more stagflationary type outlook. Yeah, but before the war began, it was all AI, and where's the AI disruption, and how risky.
All right, MACD's crossing. S&P might actually get a bid here.
Do you think we end up on the other side of this war on that? So on some of the controversies that kind of animated the first 2 months of the year, I think that a lot of that market action underneath the surface created huge amounts of dispersion. Some of it not entirely logical. So we're looking at some of the spreads between semiconductors being so highly valued and software being shunned, and memory stocks being bid up and hyperscalers being sold. We think some of those extreme trades are really going to reverse themselves. So we're seeing opportunities both long and short in this market.
And finally, really quick, we just were talking financials. That's also one of your buckets of opportunity.
Absolutely.
Micron turning up now. Micron.
Folks are not really incorporating into their forecasts quite yet, and I'm not sure, that even, Goldman CEO gave it full shrift. But the globally systematically important banks, the capital markets banks, are looking at significant regulatory reform towards the end of the year.
MACD's turning up. Price is starting to move. Watch the S&P here.
Basel Endgame, GSIB surcharges. You could see excess capital in these banks rising to $275 billion that can be put to work in terms of share repurchases, additional deal underwriting, as well as just direct lending.
Yeah, well, we did get those new rules yesterday. Bowman commented on them again this morning. Lisa, look forward to having you back soon. Talk about some additional playbooks. Thanks so much.
Great. Have a great weekend.
Up
next are the midterm elections. The biggest risk to this market? Meredith Whitney joins us to make the case next.
We'll get to FedEx and what's driving the company to raise its guidance even in the face of all this geopolitical turmoil, with the S&P trying to bounce off of the session low. Stay with us.
Six weeks. We've been down for 6 weeks. All right.
9 point the big three stocks, 3 charts, and 3 trades. Kevin Green will take us through the charts, and here to take us through the trades is Tim Bowen, Chief Technical Trader at stocksandtrade.com. So great to see you both, and of course, happy Friday. So Tim, let's start with some big picture thoughts here on the overall market. As I do come to you, it feels very similar to where we were about a week ago with markets. I mean, seeing some still really beaten up overall activity for the week.
Yeah, I appreciate the happy Friday. I don't know if the market is accepting that happy Friday. I'm dressed all in black for a reason. But, it's one of the, as your previous guest mentioned, one quote that I've always kind of lived by is, markets hate uncertainty. When there's all of these things going on in the world, investors, traders, everybody starts getting scared. People get scared, they don't put money in the market. They pull it out or they stay in packed. So as he mentioned, I'm just looking forward to the day that we either get into this situation or some sort of clarity towards the end. Now, that being said, as you mentioned, kind of last week, I mean, I know we've had I'm still pretty impressed at the resiliency of the market. Now, this could change this afternoon or Monday, but kind of similar to that story I told last week. I just think if 6 months ago you laid out all of the situations that were in the world and asked me or any trader or investor where the overall markets would be on March 20th, I think if you laid that picture out, everyone across the board would have said way lower than where we're at. So to me, it's scary out there. Cash is a position, play defense, but I'm still encouraged based on the resiliency of the market. When you add up all the things going in the world, I mean, you got the news with super micro and all this stuff. There really has not been a real massive sell-off like to safety yet. So I'm encouraged by that.
Yeah, I think a great point. Nothing like what we saw last April, which felt, entirely different just as far as performance and some of the pressure we saw in the overall markets. But you mentioned this theme of resiliency. So let's talk about then the first name today here, which is Devon Energy, which has been one of the strongest really swing trades this week, despite all the macro noise. And so, what is it about the current cash flow and of course oil setup that does make now Devon look a bit more primed for say another leg higher?
Yeah, so I actually, to help me with my trading, I actually built an AI about a year ago to look at the fundamentals, the charts, look for themes, hot sectors, etc. And Monday, the number one was Devon Energy. Now I know it's not like this is some out of the blue idea. I mean, you can look at any sort of gainer scan or the best stocks of the week. It's oil and gas everywhere. But what I like about this is, it's just been a nice orderly catch up, decent fundamentals, obviously in the hot sector, and I think it offers a little bit of insurance from the geopolitical situation. I mean, at this point, I still hope that oil and gas prices will come down, but it's not going to be anytime soon. So, the other ideas I have, exposed to AI.
No follow through. Market's just kind of dead. Nobody's buying down here.
Don't have to micromanage, just kind of wallet pattern type trade.
The importance there of overall diversification, and this name's up 1% today, and up now 38% roughly this year. And so KG, walk us through this chart, because I will say it's very rare to see something that is continuing to see new high after new high and just really up.
Yeah, you are seeing a lot of enthusiasm for this name. Now, obviously, this is actually a shale producer and a Permian producer, so a little bit also shielded from the Iranian conflict in a sense. If you're looking at this time last year, that tariff tantrum that you had
Low tick alert minus 800.
dropped to around $25.80.
Okay, more low ticks.
Higher lows ever since. And it actually was in this kind of, let's call it a wedge pattern, if you will, where the major area of resistance was around that $38 level. We started seeing the stock really curling up, breaking above the 50-day moving average back in November, leveraging that as an area of support. We hit that neckline of around $38.50, and it's been breaking out ever since. A small consolidation that's in purple, and now we are seeing once again that follow through for the breakout. And the thing that you have to be mindful of is that it has been basing for so long, about 9 months, 10 months or so, that the upside move, if you kind of measure high to low, still can still be actually relatively aggressive. You can actually still talk about another $15 to $20 move from that neckline breakout here. And your next area of resistance is going to be $50. Obviously, that's going to be a high, round number there. If you see a breakdown to the downside, you're going to look at that recent breakout of the resistance zone, $45.50. Moving average of $42.30, and then you start looking at that range or that wedge pattern once again. Now, RSI is actually seeing lower highs, so there is a small bearish divergence that is taking place, but the primary trend continues to be to the upside, and MACD is in a bullish formation with the 12 EMA above the 26, as well as above the 0 line. This one makes higher highs, higher lows. The trend has been bullish here. It doesn't seem like it's breaking anytime soon. And until you see this massive capitulation type of candle at the top of the trend, I think right now, higher highs is still in the cards here for this name.
Okay, and so let's assess another name that, of course, is more in that broad growth and AI-driven hype cycle, which is SanDisk, which is the name that's, continuing to just rip. I know we're lower today, but it's frankly amazing to me that we're actually still higher on a week-to-day basis as of 10. When you look at SanDisk and you see the overall memory cycle, which which has remained fairly strong, and we know that, of course, is tied very closely to AI. Why do you see SanDisk winner, and do you see this really right now as more of like the new gold in the market, that being, of course, memory?
Yeah, I mean, if you look at the cost of particularly RAM, DRAM, storage, etc., it is just exploding. I mean, I don't know if
I don't feel no
lately or a new computer when you go to that little memory upgrade button, you better sit down when you see that, and that's because AI is gobbling up this RAM. It is those of you, I'm sure a lot of you are familiar.
All right, pop.
It's a very
High tick alert plus 800.
High tech.
software that eats it all up. I'm actually running OpenClaw. I've talked about that a lot. I'm a big fan, but I'm using a Mac Mini and a Mac Studio because of the memory.
A nice little pop here.
Uses. You've got not only the data centers, but you're seeing tons of people that are deploying OpenClaws all across the world. China, massive growth. So that's basically creating constraints on the supply of RAM, which keeps pushing prices higher. Your previous guest, and you mentioned Micron's blowout earnings play. Micron's in the similar sector. So when I see a sideways stock like SanDisk has been, I just think that it's kind of overall market, forces kind of holding this down. But I think the story's going to play out in the future because, again, as I mentioned, I kind of like, buy a stick of RAM and put it in your safe with your gold coins because the value of it is just going through the roof.
Yeah, I mean, absolutely. I know, again, today seeing some weakness, but still, I mean, amazing to see still some pretty phenomenal gains on the week, which is frankly amazing. So, KG, as we do assess now the technicals here in SanDisk, what are you watching?
Well, I might have to eat my words here in about 5 minutes because it looks like something.
Low tick alert minus 800.
Stock is making higher highs, higher lows. It's been a phenomenal trader, especially on the options front here. And you continue to see these consolidation patterns and then break out higher. And I think that's exactly what Tim's looking at right now as the stock is.
All right, chop, chop, chop.
Right now, what I would kind of caution on are a couple of things. You are starting to see the intraday volatility ramp up really aggressively. Yesterday, we saw a 11% move to the upside. Today, you're seeing around a 5% move to the downside. That was around 6.5% about a couple of minutes ago here. You get a little bit cautious that if you start seeing a ramp up in volume at these current levels and that type of volatility, that could be a signal on a technical front that a potential reversal or an aggressive reversal can be taking place. Right now, we cannot categorize this stock as in that situation, but it's just something to mention here. You also have the RSI making lower highs, so price momentum has moved here a tad bit. But if you kind of look at the price action, it's also something that's a little bit more abnormal. So we may have to take that one with a grain of salt. MACD 12 EMA is above the 26 EMA, above the zero line. That's still bullish. You are seeing that blue line, which is the 12 EMA, kind of hinge here a tad bit. So we'll keep an eye out on that. And it does have several different trend lines that it could actually leverage as an area of support. And we're basically testing one right now, a short-term upward trend line here. You see the fundamental breakdown, the 50-day moving average, which acted as an area of support back on March 11th, would be your first area of support, 574.25.
Extreme low tick alert.
Moving average. Technically speaking, if you took the name off of this, you took the theme off of it, you would say yes, higher highs, higher lows. The trend continues to remain to the upside here. When you're looking at the implied volatility of this name, when you can realize volatility of this name over the last 6 months or so compared to what we have seen over the last year and a half or so, you get a little bit cautious that a quick reversal, a swift reversal could take place here, and maybe some of these structural support areas do not hold.
Yeah, and I mean, this name has been, again, a real standout of the overall tech trade this year. But what has seen a bit of a pullback has been Palantir. Now, our last thing here to keep coming up is one of these for you, Tim, with, of course, spending
Low tick alert minus 800.
Seems like upside for the AI case, but of course, we have pulled back this year. And so, walk us through your thoughts here. Of course, Palantir down about 2% on the session today.
Yeah, listen, and KG probably knows this. This is an idea that I just keep coming back to now. Just absolutely love it. Back in the 20s, that was kind of when I first.
Crude oil.
I probably should get a new shirt.
USO. Still in a range. This is the crude oil fund. United States Oil Fund. Still up here at 120-ish. Not making new highs. All right, what is gold and silver doing? Gold, silver, gold. Dropping off silver. Whoops, silver. S&P no follow through yet.
Yeah, and I mean, to that point, it has been one of the most phenomenal outperformers over more of a long-term basis. And as we've said many times, Alex Karp is definitely an earnings call always worth tuning into as he gives such a great read and just really great outlook, frankly. Every time I hear an earnings call from them, it does even give me encouragement just based on some of their
Markets just lacking momentum, lacking traders interested. I can see why. We're just waiting for institutions to show their hands, maybe buy some positions. There's a few things working, not a whole lot. Energy working, Chevron, etc. Chevron, ConocoPhillips, Apache, Diamondback Energy, Devon Energy. All of these are working. ExxonMobil. Additional stocks that are working. Talked about if you're going to day trade or you're going to scalp, use your 1 minute chart and an RSI. No reason to do much of anything today. Verizon looking okay. Using a 1 minute chart. Okay, this got oversold again. Not that interesting. More interesting this morning at the open. Verizon, Dell buyers showing up. Okay, Dell looks pretty good here. Dell RSI is near overbought. Dell grinding back up. Okay, Dell grinding back up. Dell looking for Micron to bounce.
really interesting time, and I'm really glad we have the opportunity to connect. The first thing I'd say is that to your point, the actual moments in the market, the systemic moments that continue to push gold higher, are definitely playing in, and there's many, many that are entering the market and feeding into that momentum that's pushing the gold higher and pushing it and pulling it back with a higher level of volatility. But what I think is important to understand and underpin everything, the move by the Fed this week to specifically say, don't expect a rate cut over the course of the year. We're going to look at and see how it will play out as we look at the broader underlying conditions of economic sentiment that's going to move gold over the longer, more structural move up over the course of the year. We need to let the momentum of the short-term impact of the war in Iran and conflict in the Middle East measured against
S&P
the shift that we're hearing and seeing
just sitting here doing nothing since about 10 o'clock.
structural issues that are actually giving gold that.
Hour and a half later,
So we're not surprised by the pullback, but actually are just letting people understand we're going to have a higher level of volatility and more movement.
trade desk, looking at trade desk. Let's see what that's doing. Trade desk. Okay, a little reversal here. Trade desk got a ways to go. Trade desk.
towards more yield-bearing assets as rates perhaps rise. And so what signals right now tell you that this is more of that tactical rotation rather than, say, a lasting shift away from gold?
Well, it's the opportunity cost of looking at those yields right now and people saying, hey, look, I need to take advantage of that. And gold being a liquid instrument in a portfolio often is used as a source of liquidity when you need to make a rotation. That, plus the fact that we're up over about 135% over the last 18 to 24 months, those factors are saying, hey, look, let's take a little money off the table, let's rotate into these yielding assets. But again, I would emphasize the fact that structurally, we're not seeing people pulling away from positions in gold. What we're seeing is this overall use of gold in a tactical way to see what they can do to get out of a position and rotate, but also hold on to it because, again, structurally, when we look out, is it going to be more inflation or more of a stagflation environment that we start to see as issues and impact that comes from the conflict in the Middle East weigh in on the economic conditions globally?
Okay, and so turning to gold, of course, as a service, what are some of the biggest structural problems, in your opinion, with today's digital gold market that right now could perhaps be fixed by some of the overall improved infrastructure as well as just hopefully some continual design fixes?
I think that right there, it actually amplifies exactly what our opportunity is for the gold market. There have been a lot of attempts, and some are actually making some progress, but the key thing that's missing right now is some sort of organization around the infrastructure for gold, not necessarily the technical side, the infrastructure for gold to better facilitate the gold market for easier access through the digital channels. The fragmentation that is currently in place today, linking one token to one process in one market, isn't creating the opportunity for scale. So our white paper that we released today with the Boston Consulting Group is a call to action for the industry to say, hey, look, we have the expertise in the gold market. Let us help the industry get better connected, better cohesion around these physical elements of the gold market that need to be working efficiently to then really let others, in a competitive way, digitize gold in a much more effective way. The efforts today are good, but they're really very narrow in terms of their use case and their success story so far. We want to bring the gold market's heft and consolidation of it into the industry so that can really help us bring more digitization to the market.
Okay, so if gold as a service is successfully adopted, how does this really change the role then of gold for investors, especially when it comes to things like liquidity and, of course, the potential use as collateral in these digital markets?
I think the world is wide open for much broader adoption of gold. I think it opens the door for, like you said, collateral. That and the work we're doing around wholesale digitization of gold will mean that institutions wanting to trade it can use it in much more effective ways while they carry it on their balance sheet in the form of collateral for futures and other trading activities. But really what we're looking at is this big opportunity to say, let's unleash the next wave of consumer in a modern way to access the gold market, but getting that holistic effect of the gold market really fueling it. So not one token, one place, really saying the market's ready. So if you want to have a token that can actually tap into it, down the road. The key thing for us today is to really get the infrastructure connected and organized so that we can actually come to the market in a much more meaningful way in terms of the overall heft of the gold market.
Okay, and I have to ask because, of course, gold has been read for so long as more of this safe haven, this light safety type of asset. But then, of course, we have those that follow very much the crypto and digital world that argue that that is its own form of gold. So I'm just curious how you make out that relationship, considering we've seen, a continual really pullback away from some of the.
All right, just watching the markets doing much of nothing. S&P.
There's a couple of key elements to the gold market that make it quite unique, even amongst commodities, let alone cryptocurrencies. It's the fact that wealth creation and wealth saving, while also market risk and uncertainty, are the key factors of it. It's hard for you to understand how Bitcoin or cryptocurrencies have that kind of dynamic just yet. There's a definite interest, and we actually think it's an interesting space in the market, but it's different. When you want to save or use gold as a reserve asset at a central bank, it's accepted, it's proved, it's acknowledged. That's actually a unique asset and a unique place that we play in the investment landscape. It's not the case in Bitcoin. But what we like about the technological landscape of digital assets is that there's room for us and there's room for cryptocurrencies. Different use cases, different drivers. We have a place in the digital world. That's what our work with gold as a service is all about. Like saying, hey, we really need to be much more present in the space. And actually, once we have that moving, you'll see crypto and gold in a completely different light. You'll see those assets being talked about in the digital landscape.
And I like that both can obviously be successful. Of course, it does seem like we want to so much compare the two, but obviously there's space for both. And right now we need both of them to come back here a bit. But so appreciate it, Joe Cavatoni, Senior Market Strategist of America's World of Gold. Thank you so much for joining us on this Friday. Now, coming up next, it's time for the Disruptors Holdings. After a double upgrade.
All right, markets, nothing for 2 hours.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com
And on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
It's time now for the Disruptors, and George Tillett, Senior Markets Correspondent for the network, is here with me today for today's company, ARM Holdings, with a double upgrade at HSBC. And so, George, I actually thought
Thinking about some call flies. If we can manage a bounce into next week after OPEX, maybe out in April, like the 17th, something like that. Monthlies. They're going for about $2, 69.50, 7,000, 70.50. A few at a time. If we start to move higher, start to average in. Same thing we did with the hedges. The reverse is the case now. The hedges we took a while back. Yep. All right, so
essentially more than double their
nothing doing at the moment.
upgrade.
Micron, looking for that to turn back up.
Because typically this is a very smartphone dependent intellectual capital based business. They see the CPU beneficiary, this company now, from mainframe servers, including major demand from hyperscale customers. And so with that said, the integrates their neo cloud platform software, they actually see a doubling of potential revenue based on data center and of course the hyperscaler demand going forward.
Yeah, and so as far as now, as we look at trading arm here again, outperforming the overall market today, and I mean looking not necessarily resilient, but I mean at least resilient as we assess. I mean the overall the analyst calls in this week is we actually climbed about 16.5% this week. I double checked my platform there for a second because that move just feels ridiculous. So when you think through trading this name again for example purposes, walk us through your thinking.
Yeah, I think again, if you look at Dell today, it's actually higher. I think there's something going on with the server space. I think ARM is participating, and it's higher year to date by about 23%. But nonetheless, if you look at the 1-year chart, it's been a lot of volatility. And right now, what I noticed is
S&P not doing much.
reached the 200-day moving average now so far. So with that said, today's a good day, but it could essentially back test yesterday's high, which is around the $131 area. Roughly speaking, these are just rough numbers. So what I'm going to do is I'm going to sell a cash secured put based off of the support I find at yesterday's high at the 131 level. I'm going to go to
This dude that's talking advised people to, I won't say advise, but he was looking at GE selling put credits. That didn't work. Put side is really difficult selling premium on the put side because you don't know if we're going to drop off again dramatically or not.
yield to strike. That premium will roll to zero by the end of next week's expiration. And if you do place this trade, you have to be willing and able to post margin and ownership of the shares if you're assigned them at 131, but your cost basis is 127. So I'm not looking for a big move in ARM. I'm also looking for potential pullback and retest to yesterday's high. But if it just continues from here, that's fine as well. So it gives us flexibility this trade. It can go higher, it can stay where it's at.
Yeah, that said, Brother Bill, I'm not doing much of anything at this point. There's nothing to do. It's just like the markets are not doing anything.
I mean, hey, we see some outperformance this week, and especially today, given the overall market is not really aiding any of that upside. So we appreciate it, George Tillis, for all of that breakdown. Coming up next, I'll discuss another winner for our 360 round of the session as we're looking at one of the big moves today, that is FedEx. Shares are up now about 1.5%. We have pulled back a bit from the initial peak following its earnings. We'll dive into the numbers and what's driving some of today's optimism coming up next.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And track market.
New York Fangs are dead. If you looked at the New York Fangs earlier, let's see what junk bonds look like. Junk bonds. Yeah, that's down again. Bitcoin's down. Junk bonds down. IWM down. Have no risk on indicators. 10-year yield is up. Wow, the 10-year yield is almost 4.5%. Crude oil. Crude oil. Bitcoin. Bitcoin's trying to turn the corner. Okay, so last time we had a move lower in Bitcoin, it took 4 days. If you look at Bitcoin, okay, last time we pulled back on Bitcoin, we pulled back for 4 days, and then we rallied for 9. We rallied for 9, peaked on day 9 at 76,000. That was what, Tuesday? pullback Tuesday, Wednesday, Thursday into today. The last time we did this, we rallied, so I'm looking for a higher low. The 21 day is crossing up through the 50 day. If we catch a bid in Bitcoin, Bitcoin has a pretty decent probability here.
Welcome back to Trading 360. I'm Jenny Horn. Let's now check in on these overall markets as we are seeing some pressure continue. We haven't really improved too much throughout our four major averages, at least throughout the last 48 minutes or so. Seeing that consistent weakness here, S&P's down 0.8%. The Dow is down about 0.5%. The Nasdaq 100 down about 1%, with all of our Mag 7 names lower today as well. And the Russell 2000 seeing the most substantial losses, at least as it stands right now, down 1.4%. Now, if we do check in on some of these futures products, again, continual strength in the U.S. dollar, the 10-year, and crude oil, which has actually pulled back a bit from peaks we saw just about an hour ago, but still up about 0.8%. And Bitcoin remains to be lower by about 0.5%. But now to discuss one of the big earnings movers really towards the end of this week, which has been FedEx, which is seeing a pretty nice move to the upside today with, strong earnings and a beat on its top and bottom line, as well as strong guidance. So for more on this, I now welcome in Ed Matowski, Managing Partner of Chapler Investments, and Christopher Davis, Partner at Hudson Value Partners. And so, Ed, we'll start with you here. We know FedEx delivered a strong third quarter with meaningful to double beat on both its earnings and its revenue. So what were really, in your opinion, the biggest drivers behind this outperformance?
Well, their efficiencies. They've been working on developing a lot of efficiencies, just like UPS has. But I'll tell you, the one thing that's out there that no one's talking about is the hedging strategies they must be implementing right now on oil or in terms of fuel, because that could become a real problem for FedEx and all of the major carriers if they did not do the hedging properly. So even though they put out guidance and a higher guidance, I think they haven't really brought in how strong their hedging strategies have been, which is the major expense to FedEx besides employees.
Okay, that's so interesting because I've read all of the sell-side notes today. I have not seen that specifically called out, so really great mention there. And Christopher, you've also called out this quarter as really proof of this turnaround story at FedEx. So what specifically in the earnings report gave you the most confidence that this improvement is now being seen as sustainable?
Yeah, well, I think you're seeing it in the margins, you're seeing the overall efficiency for FedEx as going through the numbers.
You're watching Bitcoin for a bid.
That was certainly a tough act to follow, but new CEO Raj Subramanian is really doing a great job. You're starting to see, I think FedEx is giving us one of the best examples of industrial AI and the digital efficiencies in action. The things they're talking about in terms of the data products, the scoop that they have.
All right. Apple's still chugging along here. Apple trying to push higher. Apple trying to break out.
I also think it really stood out to me on the call that they are bringing in some new leadership to grow the healthcare part of the business. What FedEx seems to be doing is they're shifting from, just having that ground business and trying to
Here goes Apple.
was the golden goose of document delivery. And
Apple trying to make it through this level.
e-signatures really eviscerated that business over the years. And healthcare, whether it's, samples, drugs, things that need to be temperature controlled, these really value-added, higher margin businesses is something that FedEx is looking to grow. And that's, just a really great thing for them to grow their business and keep strong margins.
Okay, and Ed, we know the stock has, continued to climb over the past 3 months, and today is no exception, although giving back some of that strength here in real time. But I do think it's interesting that this earnings we saw kind of the tale of two segments, where freight was, a substantial miss. Well, then on the other hand, we saw Express continue to be a standout. And so as far as continual confidence in this operational and growth trajectory, does some of the weakness we're seeing in freight or their specific segments
All right, Apple's breaking higher, new high today.
Regardless if it comes from freight, although freight, has been taken, a lot of the freight has been taken away by UPS, and I'm not exactly sure why, but UPS's freight has increased tremendously, versus FedEx. So I think that that's something that they should be aware of and should be looking at. Really
Apple's trying to break out right here.
Good point there. Christopher, we know that FedEx is pushing more into this digital intelligence and physical AI. Even the logistics arm of the economy is not safe from the AI conversation. So how meaningful, though, is this technology? And I mean, are we seeing this going to be a major, really driver of profitability going forward?
Apple, Tesla turned the corner. Tesla.
Our biggest FedEx input cost is going to be labor. It's going to be energy. Energy you can hedge, but labor you can start to replace with technology. You can get more efficient, whether it's routes, whether it is moving things around in the warehouse, getting more robots in. I think while everyone likes to get excited about chatbots and LLMs, some of the most exciting applications of AI and the current technological revolution are the industrial applications, whether it's robots, whether it's just overall efficiencies and
Apple trying to break out.
I think those are really, going to be a big economic driver, and you're starting to see it pull into action at FedEx.
Okay, so Ed, you have a price target of roughly $393 a share, which implies, I mean, about 8.5% upside. And so, what coming catalysts do you see then driving, I mean, continual strength in this resiliency in FedEx as we look a bit more into the future?
Yeah, well, I think that they just get more efficient and to kind of, ride on the back of what was just said, more efficiencies come from AI and technology, and the manpower is a very big expense to FedEx. So as they're increasing margins, and they've been doing it for the last 6 quarters, increasing the margins, they haven't increased the business so much as they have on the margin side. And I think increasing the margins is going to help with the earnings, and earnings obviously are a pre-teller to higher stock prices.
Okay, so Christopher, last but not least, you've highlighted, I thought this was so interesting, this specialty healthcare delivery is now an attractive and high margin opportunity for growth. And so how is this then, I mean, changing really FedEx in real time, especially as we know some of their more traditional delivery outlets are going away, I mean, rapidly?
Well, it's tech in action. That's sort of whether you're delivering vials, vaccines, samples. You have to be able to have an end-to-end control over that whole cold chain system. You needed lots of technology. You need to be able to show exactly when it was, where it was, what the temperature was, and that's the type of business that technology allows you to be
Real-time market coverage means expert strategy. From the opening bell to the closing bell, we've got you covered. Pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute. With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable. Wait, that is stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
All right, let me think about this for a second.
20 years ago, Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Excuse me. All right, S&P is starting to rally. Excuse me.
We saw a little bit of stabilization here today earlier in the session, and now we're starting to see some weakness. Maybe this is that, this going into the weekend type of mentality here for equity markets where maybe somebody doesn't want to be long because it felt like we're getting some stabilization. I think one of the keys that's, causing, more pain for the equity markets this week is the fact that the 10-year yield is up at 4.37%. I mean, these are the highest level that we've seen in a while, and that's kind of reflective of that fear of inflation. And now we're starting to see estimates and guesstimates that we're going to start having to hike rates as opposed to cut rates at this point. Christopher Waller gave some good comments earlier today, and he was like, hey, you know what, even with tariffs going over the last year, that inflation was coming down. Now, he was ready to say, hey, I'm going to dissent, I'm going to cut again until this conflict started with Iran. Then he saw oil prices, so he kind of had to pull back on his estimates. But he said structurally that inflation's coming down. But now we've got tariffs. Now we've got crude oil back above $94, $95 a barrel.
that's going to lead to higher pricing across the board, whether it's for the consumer, whether it's for the corporate side, and the supply chain is going to be disrupted. So that's going to cause some problems. So, yeah, you know, I'm not surprised that he didn't dissent this time, only Mirren did. But I think if you take a look at the rising yields, the rising dollar, you know, there's probably more warranted for a little bit more fear here because we got the S&P 500 firmly below this 200-day moving average, which tried to act like support yesterday. But you know, we're still down about 6% from those all-time highs that we saw just about a month and a half ago.
KG, your take when you look across the market.
Yeah, we were seeing some weakness here, but this is a quarterly options expiration, so anything can happen going into the close. I think we probably have a little bit more of an opportunity to see a buying of the dip going into the weekend rather than maybe a sell-off. We'll see if that actually does take place. But what I find very interesting right now is the 15-minute chart for the E-mini S&P 500 is showing some crosses, especially if we're looking at the oscillators that are a little bit more bullish than bearish in nature. If you look at the 10-year Treasury yield, we had a top tick today at 4.395, let's say 4.4%. You're starting to see that back off here a little bit as well. And then the dollar has been trying to contest this 100 level. It seems like it's trying to back off over the last couple of minutes. And then some of the commentary coming from Iran, their president seems like they're trying to provide a little bit of an olive branch over to the Gulf states as well. And then the new Ayatollah had some positive comments, trying to ease some tensions here. Let's see if the market really tries to pick that up and try to buy this going into the close. And if you're looking at the technical structure for the S&P 500, we're trading at around 6650-ish. That's pretty much the lows that we saw back in November. So it would also make a little bit of sense that we have at least maybe a little bit of a retracement bounce. It could be a dead cat bounce. Maybe a
Apple still trying to break higher. S&P 500, little rally. That's about it. We had same kind of thing happen yesterday, but yet we gapped down. Why is that? Because crude oil is still very strong. Most of our indicators are bearish or neutral, bearish or neutral. Not much is bullish.
Uncertainty. Remember, oil crude WTI topped out above $100 a barrel yesterday before sliding. Some of those comments from President Netanyahu yesterday afternoon saying that they're working with the U.S. to assist them to get you know, traffic flowing through the Straits of Hormuz, and also that maybe the war would end sooner than anticipated. I think one of the keys is going to be this weekend because President Trump and the administration have kind of been pounding the table on this, like, hey, we're energy independent here in the U.S. This disruption that's causing a lot of the pain in the energy markets at this point is negatively impacting mostly Europe and a lot of the countries in that part of the world, Asia also. And that's a concern for them. They better get on board and help secure the Straits of Hormuz, or it's going to be even in the coming weeks, coming months, if this thing lasts longer than anticipated. The president came out and said he doesn't want to put boots on the ground. There's other speculation swirling around that they might have to kind of secure the straits. But at this point, yeah, I mean, the way that I look at it, some of these other countries better get on board and quickly, or they're going to take the brunt of the pain that's getting caused right now from crude oil being at $96, $97 a barrel.
Okay, KG, your take.
Yeah, I think we have a longer term impact for the global economy because of what's happening right now. Even if this conflict stops right now, we still have a shortage of oil.
S&P, just nothing to do here. Not much to do here, S&P.
We are energy independent when it comes to light sweet. So if you're looking at gasoline and refining that, yes, we're going to be able to maintain. And we do not have a lot of heavy sour or even mid grade oil, which is really utilized for some of the heavier byproducts. So we're looking at diesel prices as well as plastics and cars and a lot of things that go into the industrial economy. So we do still have some exposure, but Tom's right, from the gasoline standpoint, we can kind of weather the storm here a little bit. And we'll see how this actually takes place here. I think this is probably going to be one of the bigger energy crises that we've experienced in a very long time. And unfortunately, this will also then kind of reroute and readjust the overall energy complex usually is where we see the bigger strikes happening, and that's probably the biggest risk that you have for the oil markets. Over the last 2 weeks, on Friday, we have seen some buyers going into the weekend. Let's see if that's going to be the same case this time around.
Well, listen, this is one consumer here who is tired of those high utility bills, so I guess I got to brace myself for the summer. Let's talk FedEx, you guys. So
65.51. I can't believe S&P is at 65.50. 65.55. Yeah, I'm not buying this. I'm not buying this. Need to see crude oil back off. Crude oil needs to back off. Okay. It's still sitting here at the top of the range on the daily. Okay, we hit this level 2 weeks ago. Okay, same scenario. Monday, we hit this level. We've just been chopping around since then. 2 weeks ago, Monday, we hit this level. Crude oil. This needs to back off. Crude oil needs to back off.
Seems like their execution
they're historically known for stealing intellectual property, going through the back roads to get things. Singapore companies maybe used as shell companies to get this stuff in. So you don't know what's fully out there. This is just somebody that got caught. The company's not in the indictment. I thought that was pretty surprising, even though it was one of the co-founders. There was a contract worker in there also. But yeah, this is big news. But I don't think it's probably the only thing that's NVIDIA or high tech that's not supposed to be getting into China is actually getting in there. So maybe this is just the tip of the iceberg. But yeah, there's big news, and it tells you the fight in AI and the competition that's in this for the U.S. versus China to come out on top here in AI.
Yeah, well,
All right, crude oil backing off now.
essentially Supermicro really cutting ties with all of these individuals. KG, your take?
Diane, if there's smoke, there's usually fire. And unfortunately, there's been a lot going around this company over the last year and a half, 2 years. And unfortunately, this is just another black mark on their company here. And I'm right there with Tom. These are the individuals that probably got caught, but there probably is something a little bit deeper there. We'll see if that actually does kind of take place. If we kind of go back and we look, we had the accounting scandal, if you will. They couldn't have audit. They couldn't obtain an auditor. Their auditor resigned voluntarily. We have this particular situation. So you probably are seeing an appropriate reaction when it comes to the stock. I think Dell is also catching a little bit of a bid in the potential of maybe taking some of the business. And it's hard from a corporate standpoint when they're trying to do deals.
Oh boy. We had a decent drop in crude yesterday, and it still didn't have much of effect because we rallied after hours. Crude oil.
They were kind of talking about these issues when it came to the accounting and maybe some of the issues when it came to Singapore sales. I know that Tom called that out. That was a question mark around NVIDIA's financials like a year and a half ago or so. So they were probably right in some respects here, but they weren't able to hold that short for that long. So it's an unfortunate situation. Let's see how this resolves itself.
Yeah, I do remember that. And this just catch some people up on the indictment and what the allegations are. The individuals, including the co-founder, were alleged to work with third-party brokers with customers based in China. The way they would allegedly do this, they would place purchase orders with the U.S., then ship them, assemble in the U.S., then ship them to a company in Taiwan, then deliver it somewhere else in Southeast Asia, and then eventually it will get to its final destination in China, allegedly. Obviously, these are allegations right now. We'll continue to watch this as well, but those shares sharply lower. We've got bull versus bear coming up. Guys, get their example trades put together for Microsoft. It remains under pressure today. We'll have more fast market after this break.
Nothing to do. Nothing to do right now. Okay, it's 12:17 on the East Coast. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Friday, March the 20th.
Some labor, and I do believe you'll see AI, cause a lot of labor displacement. We're still at such a level where that consumers are working. Now, you can argue about their pocketbook, the share that can go to items away from energy, away from food, away from necessities, still live. 2/3 of the economy, 2/3 of people rather, live paycheck to paycheck. So that's a big issue. So I'm not sure, even though you've seen some retail stocks bounce, like Dick's or even Lulu take a little bounce off the bottom. I'm not sure that's where I'd want to be. So I'm just not free. I like geopolitical gains. They've always been buying opportunity. This one seems a little different because of oil is straight up.
If you look at the Fed's SEP earlier in the week, they
at that, although there is a little bit of a hawkish undertone within that last meeting we've had, those who can be found on the dovish side are still looking through it as a positive lens right now, even though those rate cuts are getting pushed out. So there is that sort of one-time price adjustment that is still in the narrative. And if we get through some, the impact of the war over the next couple months, this next quarter, and again, these banks, to just go back on that, they're trading off of what these growth forecasts are going to be, and private credit being tightened up. I'm looking forward to hear from a name like Goldman Sachs in the next earnings report down the road. It's trading at the 200 moving average. It's trading at
All right, futures continue to rise here. Crude oil's moving higher too.
from the banks, see more from the data over the coming months. And I don't think the situation is as dire overall as the headlines would tell you. So I remain optimistic down here. It's just, again, you don't want to see a bad technical close today.
Yeah, and Brent, a big part of why the banks have sold off, of course, is capital markets. And then you have Goldman CEO David Solomon with his annual letter this morning talking about how he expects activity to accelerate. And a lot of that has to do with the regulatory backdrop. And I'm just curious how much stock you put in that. And does what we've seen with private credit pose a risk to that narrative, given that the backlog for 2026 was supposed to
Broadcom breaking out here, Broadcom.
activity, and here you have some just broader consternation about that whole area.
I think as it relates to the capital markets, I mean, from what I hear, IPOs are getting pulled or getting delayed. So that's not great. So that can change pretty quickly. I think as it relates to private credit, continue to go back. I mean, this all started with Tricolor and First Brands, which were not private credit issues, by the way. Those were bank issues and fraud, which were not private credit. And so I think that the liquidations, we'll have to see what the impact of that is, if that actually impacts sponsor-backed lending and deals to get done. We'll see when these numbers kind of flesh out what the actual dollar amount is. But I do think that, David Solomon's talking about
Okay, and more of the New York banks are turning up, looking good.
would be my base case. But I will say the Iran conflict, the Iran war, we can't just dismiss it because it's very hard for me to figure out how this ends. Because President Trump, I don't think can just end it. That to me is where investors are uneasy because we all understand that unique dynamic that was that I don't think the Iranian government is going to get out.
Right.
Yeah, I like the financials actually, and Greg made point twice more than that comment more before. Capital requirements, loosening capital requirements are going to be major for the banks in terms of buybacks.
And why didn't they react yesterday? Is it already priced in? Are they waiting for the 90-day comment period?
The news has been talked about for a while,
Yeah.
right? So
But I feel like
Palantir rising off the low as well. Palantir working.
they were expecting a slight increase in capital levels, and they were actually a decrease.
yeah, I just don't think it's the market where the traders there to drive it, right? They're being tight. They've got more leverage on hedge funds than they've had in a long time as of last week. So I think it's not a near-term bet, right? You just don't buy it. It happens. Particularly we got all the other when you've got all the headwinds. In terms of private credit, Goldman's out there raising funds for another private credit fund. So I think the fears are overstated. I think the weak underwriters are definitely going to suffer. And but overall, I don't really see it blowing up. I mean, what causes these to blow up is a run of the bank, typically.
I do fear the earnings being hampered by less lending within the private credit. That is the reason why we did sell Goldman Sachs. But looking ahead, I think there is some excitement for the banks that can be bottled up and be ready to be seen within the later part of this year. Regionals as well are something that I think would really benefit. We're really looking at that space very closely because we're very underweight the banks and American financials in general, and we'd like to get more capital to work there. Warsh, if he gets and takes the chair, as soon as he may, some of his policies are good for steeping the yield curve back up, which we've seen kind of come out of the market over the last couple of weeks, and it could be a very good positive tailwind for those regional banks too.
Yeah, absolutely. Guys, thank you so much. We're going to take a break. Up next, fraud, smuggling, and a multi-billion-dollar cross-border scheme. The shocking new allegations driving a 27% drop in our chart of the day. Details next.
All right, crude oil still pushing higher here, folks. Crude oil. Okay, it's still within a range. Let me just put this box around it. Basically in this box. Okay, let me turn this off. Turn that there. Turn my line weight up. Okay. All right, so we're basically in this box right now. Crude oil. So we moved above this level. This is Friday. That big green candle is Friday. Then Monday was started off 2 weeks ago with a big spike up to this level. We've been consolidating in this zone. Crude oil looking pretty strong. So S&P has this headwind that we got to get through. Most of our indicators are bearish at the moment. Let's go look at junk bonds again. Bitcoin trying to come off the low. Bitcoin, okay. Junk bonds, we need to see junk bonds higher. All right, looking a little better. All right, so maybe we're forming a base down here. Okay, so this is probably going to take a week or two to resolve, but we're basing down here at 95. That's a good sign for the bulls. Maybe we rally into the end of the month and into the first 2 weeks of April. That's possible. Thinking about some call flies. I haven't decided where yet. The upper wing probably around 69.50. I think in 69.50.
Low tick alert minus 800.
Okay, we're coming back in now. 69, 68.50, somewhere around 68.50, 6900, 69.50, something like that, or maybe a little bit lower. 6800, 68.50, 6900. Call flies. I think we could get up to 6800. That one wing. Let's see what those are going for. Micron watching. What's software doing? IGV. IGV. So junk bonds are showing signs of a base forming. IGV, we need to see higher highs now. Hold this higher low. Microsoft. Okay. Back down to the lows. Microsoft. Coming off the low now. Tesla. Watching Tesla at the low. Crude oil, this thing has to slow down. Crude oil needs to slow down. Hedge flows topping out. It is lunchtime, so hedge flows are topping out. This might be the high for right now. Crude oil, though. Some of these stocks that they're talking about, like Dell, look a little B and C pivot, perhaps. Dell, maybe a deep B and C pivot. Okay, here's Dell off the highs of the day. Crude oil, though. Crude oil still pushing a bit higher.
Tesla down a little bit today as well, down about 1%. It was cut to $119 from $133. Reiterated reduce at HSBC. Obviously, that's well below where the stock is currently trading. They say sales likely to only get worse. Full self-driving unlikely to provide deliverance. Bill, you own it.
We recently added to
Looking for Bitcoin to bounce. If you're thinking about things that you may want to maybe add a little bit to, let's say you're going to buy 1,000 shares of BITX. Maybe you buy 100 shares, 50 shares. If we do get this bounce at the 4-day fade back to the 21-day for Bitcoin and it rallies like it did last time, thinking it's going to rally, maybe you scale in a little bit. Stop underneath the 21-day if it can't
Low
hold.
tickler minus 800.
All right, S&P pulling back now. S&P pulling back.
Extreme low tickler.
Greg, with oil prices where they are, you own Tesla as well. Do they get a benefit as an EV maker from, as gas prices continue to be higher, as people consider what type of car to buy?
No, I mean, the tax credit is going away really for, I think, all of the EV makers, so I don't think so at this point. I mean, I think with Tesla, though, this is a great name to sell calls. I had 470 calls, was able to close those out. I sold, just yesterday, sold some more calls, made calls.
Crude oil, that's got to back off, folks, or else we're not going to get anywhere.
I do think there's weakness right now. It's interesting where you hear, OpenAI.
We're not going to go anywhere. Swarmer's down 15% right now, 14%. Swarmer.
On their AI initiatives. So I think once SpaceX is going to IPO, are they going to put all the companies together? I think some excitement will get back in the name. Right now it's not there, and I agree with Bill. It's technically a little bit tough, so I'm just going to continue to sell calls and collect that premium. So I do think it's probably 420 to me is probably a peak until we get some new news on something outside of just car sales.
Yeah, up to date, down about 7% there. Let's talk Netflix. Reiterated to outperform with $115 target at Bernstein.
All right, crude oil. Let's see if we can get crude oil to roll back over.
That's on my plans for the weekend to watch that. Great Rotten Tomatoes rating. But in terms of how to trade
Peloton.
Weiss, you own it.
Dell, Peloton, PTON, Peloton.
the market were doing what it's doing, I think the stock would have broken 100 because that's where the bounce was going. And you've got, I'm glad they didn't win more. I think that would not have been good for them. They would have tolerated it. They would have weathered it. But look, I think well played. Let Paramount overpay for it. Let them not be able to put out new content because they've got to pay down their debt. So to me, it's the same old story. Meantime, Netflix continues to acquire libraries as well and produce new content. So they're just the winner here, far and away, and the stock's not overvalued. It's more like quite a bit.
Feels like the consensus view for the
Okay, I'm going to take a couple of minute break.
right now.
Keep an eye on crude oil.
Equals with a CNBC News update. Angelica.
Need crude oil to drop off. Okay.
CEO Bill Ready is
Give me a couple of minutes. I'll be right back.
ban social media for children under 16. Writing, we need a clear standard. No social media for teens under 16, backed by real enforcement and accountability for mobile Chuck Norris has died. His family shared the news on social media, saying that he died peacefully Thursday, surrounded by his family. Norris was a veteran and martial arts champion who was best known for his role in the long-running show Walker, Texas Ranger. He was 86 years old. And CBS News announced a new round of layoffs this morning. CBS News executives told staff that it would be a, quote, difficult day at the company. Roughly 6% of employees are said to be impacted, and this is the second round of layoffs at the news organization in the last 6 months. And of course, this comes as editor-in-chief Barry Weiss revamps the network's broadcast news division. So another tough day in media, Leslie. Back over to you.
Yeah, absolutely, Angelica. We were just talking about all the changes in media and how it's impacting the market. Appreciate it. Still ahead, more on the metals meltdown. Gold on track for its worst week in 6 years. Bill Baruch runs the metal strategy and how he's playing the pullback. Halftime is back in 2. Welcome back. Gold is on track for its worst week since March of 2020, but a new note from UBS saying it might be time to buy the dip in the mining stocks. Bill, you own a number of these in the space: GDX, First Majestic Silver, Barrick Mining, Equinox Gold. I mean, do you agree with this?
Yeah.
This notion?
Yeah, I mean, we believe miners are a core position within a portfolio, and what we're seeing here is essentially it's been a cliff dive. The bullish percentage index is going from above 90 to down to about 4%. That means so about 4% of these names are trading in bullish point and figure patterns. It's ugly. Now, it doesn't mean that this is going to be, you know, it could rebound right out of nowhere. I think it could be a lull to kind of, you know, wipe out some of these longs a bit. Doesn't mean that it needs to fall out like it has this week either, but a lot of these names are closing on the 200-day moving average just as a point of reference, and that 200-day moving average also lines up with where they really started taking off heading into the autumn of last year. So got
to see this crude oil back off.
Yeah, and
top 3 holdings in our mining portfolio. I love the names. They're the people running the chief executives, the people running these businesses are terrific. The free cash flow growth, you're talking about free cash flow growth at core, like 2,000% year over year. So there is a lot of things to be excited about in the space, but it is a commodity. And commodities, so we have these boom and busts. I think we're in a secular bull market in metals, and I think that there is going to be higher to go. We just have to work through this. So we have about 10% cash in our portfolio that we're going to look to get to work here over the coming weeks.
Brandon, you own BHP. What kind of catalyst do you think the space needs to really move higher to the upside?
You know, the retail investor has gone all in on metals. And so I do think this is a healthy correction. I do think higher prices are here to stay. I mean, but if you look at, I used to own Freeport, it got called away. I just think I agree with Bill. I think you're in a secular bull market, but you do have to understand the retail investor has been all in. And so to me, it just pushed prices well above where they should have been, being that retail, and then I feel like the hedge funds follow retail. And so I think that needs to wash itself out a little bit more before the uptrend continues.
All right. Up next, Mike Santoli joins us with his midday word. We're back after this. We are back on halftime. Senior markets commentator and overtime co-anchor Mike Santoli is here with his midday word. It's a busy Friday.
A lot going on.
A lot going on.
Yeah, I mean, and a lot of these markets are kind of trending toward possible decision points or maybe some thresholds that people didn't want to see breach. So obviously, the S&P 500 kind of playing with fire. We're down at the bottom of this range. It's lasted for about 6 months or so. I can sympathize with those who say this has been a little bit too orderly. The market has kind of sagged in this very steady but unhurried way for about a few weeks. On the other hand, it's been going on a while. The average stock has really pulled back quite a bit. You've definitely done damage to the longer term trend, but I understand why the market doesn't want to walk away from the prospect that we've kind of gotten a little bit oversold, and if we get any whisper of some kind of de-escalation, some relief on energy, that we are due for some kind of a snapback. So I think that's the tricky piece of it going into a weekend when, of course, everybody wants to be hedged up. Everybody kind of is hedged up. If you actually look at Treasury vol right now, it's screaming higher because of what yields are doing. So I think it's an interesting and very kind of hazardous spot. But on a net basis, you're down like 6% from all-time highs in the S&P, and I think a lot of people might be surprised by that.
How much of that orderliness has to do with just the evolution toward less easing, or at least the market's expectation for less easing this year in terms of fewer rate cuts?
I think everyone is trying to sort through, because really, if you go from a few months ago, the narrative has really moved a long way from we're going to run this economy hot and we're going to get rate cuts and the AI boom is not going to quit, right? That was the story coming into the year.
Oh, yeah.
Every bit of those has basically been kind of unwound in terms of how the story is going to go right now. So I think yields are kind of driving the story at the moment. I do think you have to pay attention to banks firm right here. A lot of the things that went down the first and the most are not getting hit as hard right now. And so maybe that says the process is far along in terms of, this corrective action. We are coming on an interesting valuation point too. 20 times forward earnings for the S&P was 23 a few months ago. You haven't traded below 20 forward this bull market, for this 3-year bull market, except for 2 weeks around Liberation Day. Is that a floor? Is that kind of false hope? I think those are the things we're going to be thinking about going into the weekend.
And you mentioned the banks and financials, the worst performing sector year to date. Obviously, they had a huge run last year. So it makes sense that you might see a little bit of people taking.
And you'd want to, but I think it's interesting that, or at least I'm not ignoring the fact that they're firm in here and they're not necessarily taking an excuse today to take another leg down. They got to prove a lot here. I mean, it has to continue. It can't just be a one-day blip. But if I were really worried about credit, I think that's another thing that's right on the brink. Investment grade spreads are like 90-something basis points over treasuries, above 1% above treasuries. That's kind of where things get dicey. So again, we're on the border.
Yeah, we've seen a widening out. Although there was some data yesterday from Fitch that private credit default rate actually ticked down in the trailing 12 months.
I mean, it's a small absolute number.
So,
right?
It
default,
is.
so it's kind of like month by month it can move around.
Yeah, I think it was like 5.4% on a trailing 12 months basis.
Yeah.
So we'll see. But it's interesting, certainly to watch as a microcosm of what the market is expecting for the broader economy. Mike, thank you.
All right, see you later.
Up next, break out your passport because we are going global, where the committee is finding the best opportunities overseas. Halftime, we'll be right back.
And both these companies, because they're both
Crude oil is still hanging out at the highs.
firm, if you go back to
You got to get crude oil to back off.
from July of last year, they talked about in their call how they're trying to grow aggressively into the data center CPU markets. Now, if you look at their business overall, they're essentially a licensing processing application company. They have about 90% market share globally when it comes down to mobile applications. Everything from improving energy efficiency, high performance, the CPU markets, as well as the mobile semiconductor markets. And effectively, very high margin business with about 6% of their sales coming from royalty revenues. And I think HSBC's call here is quite interesting because the price target move is quite aggressive, over 100% increase relative to the previous price rating at $90. Now they got 205 at the double upgrade from essentially reduced to a buy rating. And I think this is interesting because based on what they're saying is that they expect a double of revenue going forward. And if that occurs, and I would suggest even maybe half of that going forward, that could be very accretive to ARM holding some price action, considering it's an extremely high margin business, 96% gross margins. And that increase in revenue will trickle down to the bottom line very quickly. And again, if you consider what they're doing in their application markets, they've got software as well.
Market's not moving much. Just looking at some of these stocks, like Palantir. Palantir is still above the 50-day. This is what, day 13? Day 13, Palantir. Palantir looks okay. Just not going anywhere today. You can see VWAP is fairly flat on the left. 50-day blue line on the right, or above that. For the last 2 days, we had buyers below this level. Really, all this week, we had buyers in this zone. ARM Holdings, that popped up. That's fading. Hit the 200-day on the right. Got an upgrade from HSBC. It's also going to be affected by NVIDIA's Vera Rubin. Micron, we're looking for Micron to do something. Micron not doing much today, just fading inside day, maybe next week. Applied Materials, that bounced yesterday off the 50-day, pulled back into yesterday's price action and bounced, so that looks pretty good. These are going to benefit from Micron expenditures, along with LRCX and Applied Materials. Those look okay.
Low tick alert minus 800.
Crude oil just not given a green light. Crude oil still hanging out at the high. Crude oil. Okay, we're still moving higher.
Starts to improve, that is going to trickle down to the bottom line quickly because it's a high margin business. Price will move very quickly. So I think it's one that be worth watching. Let's put it that way.
George, that's George Still, a senior markets correspondent with breakdown on
S&P.
Let's get Tom back in here, for example.
S&P is sitting here.
Let's get into it. Your thoughts before the
same place we bounced in the past. Consider taking some of those put flies off. If you still have these 66, 65, 6400s, maybe keep a few for the possibility that we come down towards 6,500 next week. I have a couple of those left. Let's see.
There are 99% of the smartphones out there, and smartphones had a really good year in 2025, really good start to the 2026. The concern on that side.
Okay, almost 7% now off the high, all-time high.
New smartphone sales, is that going to pinch or hurt demand moving forward? Because memory goes into those smartphones too, and that's starting to get expensive.
All right, so we're like 4 weeks off of that all-time high, 5 weeks, 4 to 5 weeks off that all-time high. We just continue to roll over here. Below the 200-day, RSI, no turn yet. Stochastics oversold. MACD's oversold. Continues to move lower. MACD. Volume, distribution, another distribution day yesterday. 13 distribution days.
But it's been a choppy trade over the last 12 months or so. So I looked at a strategy where if you put a
bid in for the stock. You might not ever get filled on that. It might not ever hit that level where you'd buy those shares, even if you put like a GTC order in. So I looked at a way that you can take advantage of higher implied volatility, maybe put a cash secured put in where if the stock does fall below your strike that you're selling, you have that potential or opportunity to buy the
13 distribution days.
If not, if the stock
That's
doesn't
pretty
go below
wild.
your strike, then you just get to keep
Crude oil, that's the thing. Crude oil, VIX will spike with it.
For this example trade, just 13 days to expiration, and I sold it out of the money put, the 130 strike put. You're going to collect a credit of roughly about
Microsoft, Nvidia, Apple, everything is pulled back from the high, from their highs of the day.
But if you collect that 350 credit, that's the most you can make, $350 per spread. But as I mentioned, it takes your break even where you purchase the shares down to 126.50 if you get assigned on these short puts, because of that 350 minus the 130 goes down to that break even of 126.50 to the downside.
Crude oil.
Short those puts and get assigned. Now, what's your risk? Well, your risk is over $12,600.
The good thing, if there is a good thing with crude oil up here, is it's not breaking out and continuing to move higher. Futures. We're just inside this box, basically. And that's subjective. You know, we could be looking at a box that's much taller, like back down to here, or just this little range right there. This range for the week. This is what's driving the markets, though. News, macro, and oil. Oracle's trying to turn up in the meanwhile. Oracle's trying to turn up. Futures are starting to bounce. Okay, watching hedge flows, S&P hedge flows. This is just a lot of chop, folks. A lot of chop. Maybe we get back up to the high of the day. S&P. S&P trying to turn back up. It's just a big range, looks like. I don't think we're going to get anything going today. If we do, wouldn't be surprising, actually. This is one of the higher volume days of the year. Quad witching, triple witching. Okay, futures popping back up. All right.
Welcome to Schwab Network, where real-time market coverage meets expert strategy. From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
Swarmer trading 52. That's about what, 20 bucks off the recent highs or more. SWMR, Swarmer. Okay, so people are just cashing in their chips end of the week. Swarmer pulling back.
One of the most important things is you're making a play in a risk-defined way here going into earnings. So that would be a further downside area.
I hit 65 yesterday. It's trading just above 40 now. Just above 40. Pretty decent IPO. Swarmer. S&P.
Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable. Wait, had a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time. Jim, my financial consultant. I programmed that 20 years ago. Jim's really been there to answer any questions
Okay, let's look at a few other things. All right, we're losing a lot of stocks. Starting to look like what was it, Tuesday? Tuesday where we had 90 stocks advancing. We have 156 stocks advancing, 24 on the Qs, 156 on the SPY. NIMO back down to minus 75. Crude at highs, junk at lows, breadth deteriorating. Most indicators are telling us to look for more downside. I wouldn't be betting on upside at the moment. Let's see, junk bonds. Junk bonds are basing down here. That's the only good thing, I guess. Looks like they're basing, haven't moved much. 1 point movement from the low to the high for the last 6 trading days, 7 trading days. MACD stochastic. Everything is set up for a bounce. We're looking for that March. We're looking for that end of March rally. Markets have bottomed over the last 20 years, mid-March usually, mid-March to late March, sometimes early April. Breath still deteriorating. Had a good start to the week. At the end of last week, we had this hook upward. Then Monday, Tuesday, we rallied. Wednesday is when we started to see, towards the end of the day, we only had about 90 stocks advancing. And then yesterday into today, deteriorating further. Looking for a higher low. Number of stocks trading above the 20-day are also in the toilet, but that's good for the bulls. We're looking for the opposite. With everybody panicking, with people panicking and selling shares, we're down at 15%. 15% of stocks lower than 15% or above the 20-day. 85% of stocks are below their 20-day, 50-day, 50-day similar. 24% of stocks are above their 50-day moving average. All right. 15%, 14% are above their 20-day. So this tends to be an extreme that we're looking for maybe next week. Maybe we get a bounce next week. Maybe something over the weekend helps resolve the Iran conflict. I doubt it, but that's what we're looking for. Along with this end of the month, mid-month March rally. With everything in extremes, let's go see what Bulkowski looks like. The pattern site. Okay, Bulkowski. Okay, we've got 4 of 5 red. Chart pattern indicator. Chart pattern indicator. Okay, chart pattern indicator. Okay, so you can see right here, 31%. 31% is the bearish signal. 31% is a bearish signal. We got 98 patterns, bearish patterns, 45 bullish patterns, and 121 patterns waiting for breakout. With these extremes on a bearish side, we're looking for a turn back up. Not today, but next week. Looks good. So yesterday, you can see earlier this week, this number was 14.9% bearish. It's starting to improve. Okay, it's at 31%. So this number is steadily improved from Tuesday into Wednesday into Thursday. Now it's at 31.5. So that's a trend that's improving. More stocks becoming bullish, waiting for breakout, and fewer stocks being bearish because we're at extremes now. Okay, S&P, hedge flows watching.
And so if there was ever going to be a broadening of the rally, a rotation out of those names,
S&P. Okay, we've hit this level twice before. This is the third time. You can make the case for a left shoulder over here.
Low tick alert minus 800.
A head.
Extreme low tick
Maybe a
alert.
bounce next week. All right, we got low tick alerts. Maybe a bounce next week to create a right shoulder up to maybe 6,800, 6,850. I'm thinking about a call fly, a cheap call fly, maybe 6,750, 6,800, 6,850. We might be able to touch 6,750, maybe even 6,700, 6,800, 6,900, something like that. 67, 8, 900. Call fly. Okay, if we get a bounce, maybe we'll get to 6,700. You'll start profiting from any bounce back towards 6,800. 6,800, 21 day, 50 days at 6,850-ish. So what I'm thinking is if we get any kind of bounce, okay, 6,700 might be one level, 6,800, 6,900. Okay, so this would be the center of the fly right here. That would be the center, 6,800. So any bounce back in that direction would start making money. That's a cheap way to play it. The put flies worked. Those were going for $8 today if you took any more off. We got in average around $3. $300 per contract. We got all the way up to 10 on those, scaling out on the way down. $7 and $8 yesterday and today. So that was over 150, 166% today if you took them off today. RSI is a bit oversold. It could get more oversold. But with all the extremes I'm seeing, I'm thinking that we're going to get a bounce soon. We'll get this OPEX out of the way. Bounces have generally come on the March OPEX right after. All right, if you're worried about the markets, it's probably going to bounce once we get crude oil to back off, of course. Got to get crude oil to back off. Crude oil.
Combined with all that's going on in the world, there seem to be higher stakes from a market standpoint around this report. And I thought they did their best to quell those concerns. Yeah, this stock was at 380, 385 earlier, 380, mid 380s, and it's pulled back, 20 some dollars from those highs. It's settling in around the 1 month moving average, around the low 360s. All in all, win for FedEx investors, and I thought a win for the macro market.
I mean, that is true. And I mean, as far as like revenue is concerned, we saw some signal improvement. We saw some pricing discipline across its network. Operational improvements also now being reflected in the margins, which is also aiding some of their efficiency initiatives and better customer mix. Now, the market response obviously was constructive with shares outperforming, the overall market today. But also, I thought was an interesting call out was this AI-driven automation and network optimization initiatives, which they did highlight increasingly translating into these bottom line gains. And so it's a space where it's easy to understand why like automation and making things a bit more streamlined would be a wonderful value add to a company like FedEx, which I always say if my building in the lobby is any barometer over the consumer's health for shipping and purchasing online, we're definitely not in any trouble there, because I do feel like FedEx to UPS, Amazon alike, I mean, it's a constant flow, but also really showing the fact that valuation, while many have said was stretched after its recent outperformance, there was less room for error. So even etching out a gain does feel like a definite win here for FedEx, which is undergoing still this multi-year turnaround story here. But now our next name is XPeng, and I know it's been a volatile couple of weeks and years for anything with not only Chinese but EV exposure. We're pulling back about 7.3% today, though, in reaction to what was its first ever quarterly profit. I thought this would be read as perhaps better news than it actually was, but this was a major milestone after years of losses. Also a clear signal that, again, this turnaround is taking hold. So fourth quarter revenue is up 38%. Margin expansion was the standout. We did see massive delivery growth. Now, also some balance sheet strength led by really their investments in AI, autonomous driving, and new model launches.
Yeah, markets are not markets are not entertaining a rally at the moment.
What didn't work? Weaker near-term outlook, intense Chinese EV competition is continuing, and profitability, while still early, it's not yet proving if they can consistently deliver on profitability across cycles, because that's really the next leg of evidence the street needs to see.
Yeah, I think that's really, really well put. And the reason I totally agree with that is this would have been the headline had you at least just met the other metrics. It's almost as if the street's looking at this with a little bit of skepticism, where it's like, did you just go all in to post this first quarterly profit at the expense of the future? And the question will be, hey, you missed on your deliveries. You missed on your expected deliveries for the next quarter. You missed on the first quarter revenue guidance. Can you make these economics work if the business isn't clicking fully? And so that's going to be the question. Perhaps they can, and those concerns will be quelled because the per unit economics are improved, and it makes the sell as an investor, particularly an institutional investor, a lot easier when you're not betting on a growth company. You're just simply, choosing a company that has a pathway to profitability. But the jury's still out right now. And the fact that the growth isn't there the same way as they're transitioning to this potentially profitable period of time going forward, the street looks at this with some skepticism.
Yeah, and I think rightfully so. And also, I know different companies, but also in the similar space, obviously in similar nations, and the fact that like Alibaba, we saw a pretty weak reaction to its quarterly report, as we're just seeing, unfortunately, the overall growth and the comeback trajectory of a lot of these China-based companies has just not been to the street's liking, and obviously what the street was expecting. And again, there were still some bright spots in this report, but I do think that you have some misses as far as now current expectations for this quarter and this fiscal year, and that's the overhang on your shares today. Now, next name today is Chipotle. And Chipotle, we did see an upgrade out of Mizuho to outperform from neutral with a price target that was raised to $40 a share from $37. They did highlight this comp inflection for Chipotle, which they believe is near term, along with incremental margin visibility. Also highlighting their first quarter earnings report and second quarter to date commentary, which they do believe offer some major catalysts. Citing these strong channel checks, they did say that the first quarter same-store sales growth estimate, which was basically flat to negative 0.4%, above the consensus of a negative roughly 1.1%. But they did say that more importantly, these trends are starting to strengthen throughout the quarter as we're seeing comp upside, second quarter traffic improvement, and also they expect sales to now accelerate in 2026 as the year progresses, given again the company's cycle of lower margin revisions, and which is almost
Market's just sitting here. Crude oil can't figure out what it wants to do.
So this is as optimistic as take as I've been able to say with Chipotle.
Don't put any more risk on at the moment.
Definitely turned a bit more sour on some of these discretionary names, but also names that are not growing at the pace they once were, like Chipotle.
This is exactly the thought I had, so I started digging into this a little bit and taking a look. And Nick Setyan is the analyst from Mizuho. $40 price target, upgrade. All the reasons that you just laid out sound extremely bullish. Sounds like there's a thesis in place. This week alone, 3 of his seems like an inflection point for CMG. The narrative is laid out. I don't know how well they've got this pinned down. I don't know that this is the turning point, but it seems like analysts are drawing a line in the sand and they're saying, hey, at some point, there's just value here.
Yeah, answer your question, Sundog, by the way. I didn't see your question until just now.
I know that it's no longer the craze across like social media. It's not cool with the Gen Zs, but I will still be doing my part and definitely contributing to Chipotle's bottom line.
This new sauce, there's a cilantro lime sauce. Apparently, limited time. It's available. Launched on the 18th at some of the company's highest, or some of its different things. It's the highest performing sauce I guess they've had in test markets to date. Cilantro lime, fresh cilantro lime.
Well, that's if I can get it in Chicago. That's what I will be doing this weekend. I tried their other new sauce like 6 months ago, and it was not. I don't even remember what it was called. It was not that good. So I will definitely do.
All right, crude oil making new highs again.
Chipotle's new sauces, which is not a bad thing to introduce. Of course, that
Intraday, new highs intraday. Still inside the weekly.
Now, last thing here today is ARM, and I will say that we talk a lot about the pessimism of the markets this week. Look at the chart of ARM. I mean, and really any time frame, but frankly, the yearly picture does not do it justice because we're up 16% this week. We're up 22% this year, and up another 3.5% today. I mean, amazingly so. And so
We're off almost 7%. S&P is almost off 7%.
actually this week, other than of course this analyst note today, it's kind of a mystery to me, but we know that they're at least gaining some optimism from the sell side. HSBC was one that double upgraded ARM to buy from reduce. Price target raised by more than double to 205 a share from 90, arguing the company's transition from being a smartphone dependent really player to now becoming more and more of this AI server that's a beneficiary of CPUs. They believe is right now being actually undervalued by the market, highlighting that all major hyperscalers have ARM-based CPUs and are moving towards its both V9 architecture as well as its Neoverse compute subsystems, which then does stand to nearly double its royalty revenue per chip. And so, I mean, that's optimistic, no doubt about it. But again, 16% move this week just is kind of remarkable.
Okay, so this one really stuck out to me, and everything you said is very ARM specific. This is more NVIDIA specific, and I say this kind of tongue in cheek, but Jensen Huang and the team at NVIDIA attempted to buy ARM for $40 billion in like 2020. Didn't end up going through regulatory concerns. This company is now valued at $140 billion. Like, when NVIDIA starts making a move, I think we should pay attention because they've got a pretty good track record of identifying some value in this space.
That is very true. And also, I do wonder if we're seeing any, and again, this is this far reaching, but I mean, like, we're seeing some of these names that are seen as like perceived winners because of Supermicro's losses today, like Dell, for example. Not to say that that's necessarily the case for ARM because different worlds, but I do think it's interesting to see how right now some things are working still in tech, but those pockets are getting fewer and far
This is
between.
a good point, and it's not to pick on SMCI. I know, and I have no idea if what's being alleged is true, if it actually impacts the company or not. But if you were in a boardroom or decision-making room with these firms that is building this infrastructure on the technology of these companies, and you're laying out these competitors, which one has questions right now? It's not Dell. You're worried about whether or not a company is going to be there and you can still do business with them. Why would you build this extremely expensive, high-stakes technology on that business infrastructure? It's really tough time.
I mean, the company's already having a hard enough time executing on supply chain. I mean, why would you rely on something that's consistently been a bit unreliable? I think
Crude oil's still pushing.
we'll leave it there. We'll talk a bit
Looks like it wants to break out.
later on in our show, but we'll leave it there for the 12-hour show today. But coming up next, it's time to dive into the charts and some example trades as we will be looking at Chevron, which is up about 1.2%, as well as Cheniere, which is also seeing some strength today. Two energy players. Cheniere shares up about 1.8%.
connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Enter. This place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. Come again? Yeah, at Schwab, they can do everything. Invest, trade, get full service wealth management, and anything in between. I think I'm going to be sick. We have to buy that now.
Invest your way with Schwab. Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Welcome back to Next Gen Investing. It's now time for Chart Master, and we are talking two names in the broader energy world.
Crude oil continues. Oh, man. Crude oil is just relentless. Wow.
Consistently in oil. So joining us now to break down these charts and some key technical levels to keep on our radar is Ben Watson, our OG Chart Master, of course. And so, Ben, let's start things off with Chevron, which is up 1.2%. I mean, not a huge move, but it's a great move at that. And I mean, only adding to its 36% run this year and now about 3.6% gain this week. So energy continues to really be a standout.
Yeah, Jenny, and Chevron is one of those names in the energy space that has not always been one of the leaders. ExxonMobil and others have maybe taken that spot, but Chevron, as a large integrated player in the space, is now certainly seeing an impact from the input cost into the refinery space. But they have both the upstream, the midstream, and the downstream spaces in place, and that lets them be kind of uniquely positioned to take advantage of rises in gasoline prices at the pump, which is also helping to push this price higher. I hesitated to say throwing fuel on the fire here, but that's kind of what's going on, especially when price broke above that 195 level in the last few trading sessions here. And you see that come as a shift in the momentum. This had been rising from that 162 level breakout, but with a bit of a bearish divergence on momentum, that RSI kind of trending down while price was moving up. Now that's almost entirely reversed here. You see RSI moving significantly higher here, up into the top of that overbought range, as well as price moving higher. A little bit of a blow off the top here, but maybe not enough to worry about depending on what these oil prices do, Jenny.
Okay, and what do you assess the recent trend we've seen in Chevron? I will say it was a bit late to the party, actually. When you look at like the recent, outperformance it's seen, it wasn't immediate. It was some of these majors we saw more that delayed gratification in terms of the oil pricing environment. But with the obvious looming uncertainty of course, how long the war persists, timelines, and a name like Chevron, fairly exposed, frankly, right now to the upside, but also can be exposed, to the downside. How do you assess then, given the fact that there's still so much uncertainty with the coming weeks and months, naturally, with a name like Chevron, but also right now we know that energy is a clear benefit.
Yeah, for sure. And I think a lot of that goes back to the fact that, you think about where a lot of their revenue is coming from, right? This is coming from that downstream portion of their space, which is the at the pump.
Okay, no follow through.
Storage tank prices for the refined products. And, much like we talked about how stocks go up the stairs and fall out the window, those gasoline prices, those heating oil, those jet fuel prices tend to go up the elevator and then take the slow stairs coming back down. So this revenue stream could be in place for a while, could see some solid moves to the upside for a little bit here on Chevron.
Yeah, and of course we're, again, seeing some consistent outperformance, and right now we could, obviously see further breakouts from here, but again, we have to prepare for the looming uncertainty that seem like no one really has a clear time frame on when to expect some resolution, at least for the conflict over in the Middle East. And so now as we do assess trading this name for example purposes, Alex, we've seen analyst favorability, of course. We now see this is jumping to one of the 20 most valuable companies listed in the United States, as this surge in energy prices has really boosted some enthusiasm with its bottom line. So all that to be said, it's a pretty bullish narrative.
In this case,
is a $400 billion market capitalization company by being overly reactive to the macro surrounding crude oil prices and just energy in general. They tend to be pretty steady in terms of how they handle that. And so they survived COVID the same way that they're benefiting now. They were struggling then, but they made it through. And so say you're looking to harvest some premium in this market that has a little bit elevated implied volatility, but you're looking for something that's been trending higher. Well, Chevron fits that bill. I looked at a risk-defined short put vertical, neutral to bullish in construction. Break even about 3% lower than the current share price. So not a ton of room, but if you think it's still going to kind of trend higher along with this general trajectory it's been on, then perhaps it would work. $1.70 credit in the May expiration, 200, 195 put vertical creates about a 2-to-1 risk reward, a chance to collect 170 in premium, potentially harvest that if it stays above 200, and then 330 in risk if it does break down. That caps out below 195 with a 198.30 break even. So neutral bullish, guys, but looking for more of the same for Chevron, but it does give itself a little bit of cushion in the event that it kind of levels off like Ben was talking about.
Okay, now to shift gears into a name that is in the broader energy world, but different, because Cheniere Energy is, of course, one of these liquefied natural gas exporters focused a bit more on like the processing and shipping of U.S. natural gas to these global markets. And so, fittingly so, ticker LNG. But LNG has been all of the talk as of late because obviously exposure to straight up Hormuz, but also the role in which it plays some of the broader AI build, I know, is a looming concern. And so Cheniere has looked quite different on a year-to-date, month-to-date, week-to-date basis than even Chevron. I mean, we're up 51.4% on the year and another 13.7% just this week. And so curious what you're seeing as far as some key differences and obviously some similarities with these names.
Well, interestingly, Jenny, I mean, this is a stock that has kind of trended somewhat sideways over the course of the year, much like Chevron did, and didn't really see kind of that geopolitical risk until kind of later in the game. It had started on a pretty good rally. A lot of that, as you said, had to do with kind of the shift in focus in terms of transporting LNG to Europe and elsewhere. But now you're starting to see that geopolitical risk coming home to roost here, if you will. The break above the 246, the break above the 267 resistance levels in this particular case lead it to this kind of blow off top. But,
Man, Marcus is just not interested. Micron testing yesterday's low.
Middle Eastern natural gas terminals and natural gas infrastructure may lead to a longer term influence on LNG, on Cheniere here, which has that ability to transport what are some pretty significant U.S. stocks of that product, and might make this a longer term trend strength. The RSI suggests so, but you could also see this maybe a little bit more volatile, pulling back perhaps into that level of support down around that 267 and giving us a pretty big bull flag here. Again, that's what technical analysis suggests. That's not any kind of a recommendation here, Jenny.
Okay, and I mean, you can see very clearly there the recent bullish momentum, and I was curious about volume trends. If this is supporting the recent breakout, we're seeing this sort of added interest right now in these names, the LNG exposure, like, of course, fittingly so, the ticker LNG.
Yeah, I think it had already been coming into play, right? Because you think about the energy demands that those AI data centers are taking. Right now, a significant portion of that demand is being satisfied either by diesel fuel or by natural gas. Natural gas here in the U.S. is still fairly cheap, so that's going to be an influence. But remember, these guys are kind of in that middle space, not just in the production, but also in the transport of that. I will say this, one thing to pay attention to with Cheniere is going to be this suspension of the...
All right, Netflix trying to pop here. Netflix trying to pop up. Netflix. What's going on, Netflix? And Netflix is just sitting here in the wick, right at that gap from earnings.
Yeah, that is very true, and a good call out that we will be keeping on our radar. But so appreciate it, Ben Watson, for all of the technical help today with two of our energy-focused names. Now, last but not least, here as we think through an example trade in Cheniere here, Alex. I mean, given the also outperformance and the really phenomenal strength we've seen from this team this year, how do you think about it?
Yeah, this could be a little bit tougher one. It's not the most liquid options stock
Okay, what's Netflix doing? Netflix intraday. Looking at the 1 minute chart. There's nothing here. Nothing here to do.
Expensive stock price, high volatility, a lot of uncertainty given the geopolitical backdrop. I looked at something that was kind of like throwing a dart, and if you hit it in the bullseye, big payoff. If you miss, limited risk here. And so risk-defined call butterfly spread, looking for a move towards 300, and maybe it would settle in there in the middle of next month. And if that happened, a chance in this case on this $1 debit to make up to $900. So very customizable trade. You move it to a whatever your particular target was, whether that was LNG or another name, and you pick an expiration, and you think that that may happen. So for this example, again, we went to April 17th. We chose 300 as the short strikes, and then defined the risk with the $10 wide wings. That said, it does have a break-even point between 291. You add that debit to the first long option, and then you subtract it from the second at 310. You get the 309. So somewhere between 291 and 309 in the middle of April, this one would have a chance to be profitable. If it isn't there, which is certainly a probability, you only have $100 at risk.
Okay, now we will pivot away from some of the strength we are seeing in both of these energy names into a name that is not seeing so much strength today, and that is, putting it lightly, Super Micro is what we'll discuss coming up next. The worst performing stock in the S&P 500 by a wide margin at that. Down almost 30%, pacing for actually its worst day in over 2 years. We'll dive into all of that news and streets reset expectations here coming up next.
For instant reactions, earnings breakdowns, and hot takes that teach you about stocks
Okay.
and markets. Follow me on X.
Micron, more profit taking. May come down to the 50-day. Who knows?
Facebook and Instagram.
Low tick alert minus 800.
All right, so another low tick. Crude oil still pushing higher. Daily on the right.
With robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network. Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are. Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me. And my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren planning for their college educations. Someday it'll be their turn.
Welcome back to Next Gen Investing. Now, today for FOMO, we are looking at a name to the downside that is Super Micro Computer. That's back under some intense scrutiny as shares are collapsing here in real time following news that the company's co-founder and 2 others were charged in this alleged scheme to illegally ship AI servers containing restricted NVIDIA chips to
Futures continue to drop off more. Hedge flows rolling over. We're back down, moving back down below the lows here. Nothing to do, folks. I wouldn't be doing anything. I wouldn't put any more new money to work. Just waiting.
Low tick alert minus 800.
All right, more low tick alerts.
Accounting practices previously. Let me run you through the analyst's reaction as to what the street's been saying about this. Raymond James saying this company faces reputational damage now. It is not a good look. It could further trigger increased regulatory scrutiny now. It could affect customer trust and supply chain relationships as well. Bernstein saying it's seriously credibility issues now. Wonder if it
All right, S&P continues to move lower. So are all of the New York FANG components.
Extreme low tick alert.
The expectation is that this will not help Supermicro's customers going forward here as to winning over new ones, which could help others, and this could be less of a competitor to deal with as far as Dell is concerned, because competition has been actually part of the story as to why this hasn't been as higher margin business, particularly when you're talking about these AI service guys.
Yeah, and I will say that unfortunately for Supermicro, this is not the first black eye, it feels like, from a public trust standpoint. So only adding more fuel to that fire of being in hot water again. I mean, I've seen that line, put out by several analysts now, where it's just another leg of mistrust as far as, booking some major enterprise accounts, and also just continuing to operate in a way that, the public distrusts this company. So it's been a really interesting story to follow, and we appreciate all of that analyst breakdown and sort of the street's commentary and reaction to this news. Pretty blistering move to the downside, but appreciate it, Sam Vadas, for all of that rundown on Supermicro's sell-off today. And so now, as we do assess trading this day, again, for example purposes, Alex, this is a pretty big move. I think that is putting it lightly, but also you have to consider, what tomorrow looks like, what obviously Monday and hypothetically speaking looks like, as far as hopefully a recovery and some normalization.
When a stock makes a move like this, it becomes attention grabbing, and there's this FOMO feeling that you want to be involved in this kind of volatility. And if you have a directional bias, you feel strongly that this is an overreaction, perhaps there's a bullish trade out there. If you feel strongly that this is a real concern, perhaps there's a bearish trade out there. For those who are looking for a way to just kind of look at this as a volatile stock that's going to move, and they think that it's going to make a big move in the next week, that's what I looked at. I looked at buying a strangle. It's the 24 and a half strangle expiring at the end of next week. Basically looking for this to either completely unravel or to snap back. And as much as 7 days from now, it's a $1 depth.
NIMO, what's NIMO at? NIMO.
Or above 25 and a half. But most importantly, this is the critical piece here, Jenny, it's risk defined. So it doesn't matter which way the move goes. If one happens, it has a chance to make money in either direction. But if one doesn't happen, or not a big enough one happens, you know the risk going in, because this is a stock that was $30 yesterday, $30 and some change. It's now pushing $20. So if you were a shareholder of 100 shares, you'd be down over $900 right now in that position. This whole trade in a one lot can only lose $100.
Yeah, and I think a good way to really
Down volume, still exceeding up volume. NIMO's down to minus 78. Nothing to do. Really nothing to do. We're starting to see some short covering. We could see a pretty nasty rally off the low. Down 70 handles. Hedge flows flat. Okay, all the New York Bangs are lower. Let's go take a look at the New York Fang. All right, here is the S&P. 6.7%. We bounced here before twice. Crude oil. Crude oil still pushing higher. Crude oil.
Everything we need, all in one place.
I can set up for college fund.
I've been learning about trading strategies. Schwab helps me generate retirement income.
All this Schwab is everything you need is making me cranky.
Does somebody need a map?
Invest your way with Schwab.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are. Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern. Morning Movers only on Schwab Network.
Welcome back to Next Gen Investing. And so now really to discuss the growing scrutiny we're seeing on Live Nation and Ticketmaster, including if the FTC could finally move against the secondary ticket market, and what a major trial involving Meta and YouTube could signal for the future of algorithm regulation. So joining us now is Seth Schaffner, Managing Director at Strat Americas. And Seth, thanks so much for joining us on this Friday. We know Congress is still suggesting Live Nation play this bigger role in pushing ticket prices higher. Curious what you see as the most credible evidence that regulators can now point to from here to see this progress.
Well, I think, it's great to be here today. I think that there's just an effort on the part of states. I think 27 of them, that is sort of being prodded by this report that's come out from Senator Blumenthal, that kind of indicates certain practices.
Crude oil is still climbing. If you're thinking long S&P, you got to see this turnover. We need to start heading back towards the 90s, 80s, lower 90s, 80s.
I think that'd be a pretty bad thing if that turns out to be true. Actually, it might be grounds for people to really push and
Futures still rolling over.
nation and maybe protest that settlement or just do things at a state level. The settlement that happened 2 weeks ago, I think a lot of people think was kind of a slap on the hands at the federal level. I mean, I thought it did some good things, has kind of a lighter touch. It freed up a bunch of the exclusivities that I think were really troubling between venues and ticketers, and certain artists supposedly felt some pressure to go on board with Live Nation's promotional programs. So I think the settlement actually freed some of that up and was generally speaking a good thing. But it might unravel a little bit, or the states might protest it and do something on their own.
Seth, this is getting a lot of coverage, and for good reason. Consumers is a huge pain point, but the lesser covered, perhaps more sinister of the two stories is this bigger social media trial that's taking place. I know a few of them decided to settle outside of court, but what's the latest with what's going on in LA?
I agree. I mean, this case, if it were to result in a certain way, if Meta and YouTube were found guilty, which is probably unlikely, and it had, another contingency, some structural implications, because the focus of the case is actually around technology and structure, not about content, could actually potentially have pretty massive implications across the board. I think it's really unlikely, that the case looks at how these social networks were constructed, and if they were constructed with bad, really malicious intent to hook users and addict them. And it's kind of going after the structural side rather than the content within the social networks, because the latter
These social nets are protected by Section 230, basically. So, but two of them settled early. TikTok settled and Snap settled, and I think right now, Meta and YouTube probably think they're going to win, and that's why they haven't settled right now. But if some extreme circumstances could change the products and could inhibit some of the algorithms and the way they work, and yeah, that would have some pretty significant business impacts.
Okay, and continuing on with what you mentioned, of course, that Meta and YouTube trial. I mean, what do you see right now? What a win or loss could mean for how algorithms are now regulated going forward?
This is a really great question. I mean, I don't really know if there's going to be an immediate impact on the regulation of an algorithm per se. I'm much more of a fan of moderation, which, my hope would be that both of these entities that are still on trial, and even the other two as well, kind of use this as a warning or a bellwether to moderate their platforms.
Crude continues to climb persistently, creating a headwind for S&P.
Can actually be AI moderation tools as well. So I think that's what I would look to more than some type of actual regulation that would come out of this. But I think actually if there was something intelligent, whether it's on the algorithm or even AI, I would welcome that as well to see what it looks like from the U.S. The Europeans are always out in front of us on that. So.
Seth, kind of a bigger picture look at this then. Like, I'll just use X as an example. And my understanding, they're not really the big named party in this, so to the side. But it does seem like the incentive structure is encouraging this behavior from the user, where if you say something kind of, I guess, that spur engagement, makes people feel a certain way, they're more likely to click on your post. That makes it more likely to be monetized, and it becomes sort of this self-fulfilling service in a way, without trying to overly regulate and adjust these algorithms. Is it more on the kind of trying to find a way to incentivize a different type of activity?
I mean, it's a great question. Firstly, I see it as a two-way street because that both sides are motivated. These algorithms, in my view, are created to amplify engagement, right? And it could be good engagement or bad engagement. I don't think they were personally set up for malicious intent. They just tend to work that way. And if you looked at the structure of them, they all work a little bit differently. Maybe TikTok's is a little bit more effective. So, I personally just think it's going to be about moderation going forward, basically, rather than tearing apart these algorithms. And I think, the stuff with TikTok's particularly interesting because, they're going to have like an American-led owned algorithm, if you will. And, I think the fear on a macro level, and I'm not talking about users or about the technology titans, is that they still create the same environments that existed. Remember, users opt into this stuff, right? No one's being forced to use a social network. And I worked at a place called AOL years ago that's long gone. That eventually things come in and wash those competitors away. It may happen with all of these things.
Crude oil still moving higher.
You're probably seeing people settle and make these close bets. So it's a tough question, and I'm still a believer that you need to have moderation all across the board and not change things too much personally.
Okay, and I think such a great point there and a good place to leave it. So appreciate your time. And of course, happy Friday, Seth Schachner, Managing Director at Strat Americas. Now coming up next, it's time to discuss Planet Labs. The satellite operator touched new all-time highs after its quarterly earnings as its defense and intelligence units continues to drive growth for the company. So we'll dive more into those results coming up next.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour.
Oh, boy. Just looking at the stocks that are advancing today. From earlier today, Chevron, obviously energy still doing well. Goldman Sachs coming off the low. I like it, but I won't do anything on Goldman Sachs until next week. I want to see how the markets start off the week, if we manage a bounce or not. I would like to do something with Goldman Sachs, though. I have no position. I only have a position in JP Morgan. JP Morgan needs to get back towards that 300 level.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
NVIDIA, multiple occurrences down at this level. We've hit this level so many times. Is that going to be it for NVIDIA?
Innovation and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Welcome back to Next Gen in Investing. It's now time for Under 30, and we are talking PL as this name, of course, Planet Labs, seeing a huge move today.
All right, TSSI and Dell, those are likely going to get a lot of sales out of this whole debacle with SMCI. Dell off the highs of the session. TSSI, looking for that to follow through as well. I like Mondo. Closed SMCI some time ago. Bought some TSSI on the gap down for the previous earnings. Added along the way. My average is around 11. So this has been 3 months, 4 months of just waiting for this to do something. Dell jumped higher. At least I'm not in Super Micro. That was down quite a bit. Super Micro.
Aerospace and defense is a huge market. Geospatial intelligence, and we all know that imagery is very big right now, especially when it comes down to things like not just national defense, but border, insurance industry, forestry also uses Planet Labs technologies, governments, also the energy infrastructure demand.
All right, future's starting to turn up now. Crude oil still at the highs. Looks like Bollinger Bands are starting to come in. So Bollinger Bands coming in is telling you that we're going to probably consolidate in this area. We might have seen the high of the day now in crude. Crude oil.
It's important in the context of the price action. I talk all the time. I mentioned it many times that companies that are losing less money and they get to that break-even threshold or close to it, that's when you see the best moves in stocks. And that's the case here in this name, especially the last 3 quarters when they got closer to that break-even level. They were expected to lose 5 cents a share. So again, that's a little bit of a marginal increase versus the estimate, and that's big price. And bills and sales, they posted around 87 million. That was better than the 79 million estimate, 41% year over year. So that's also really good. And if you look at the fiscal year for 2026, full year, the company posted $307 million in sales, besting the $268 million prior. So that beat it by about 15%, and that's also a catalyst. But the backlog also improved to basically $900 million. So if you look at the trailing numbers on a sales basis, around $300 million, the backlog is now 3 times last year's sales. That's a huge catalyst as well for the business. And they're also guiding towards adjusted profitability this next year between 0 and about $10 million. That's also a very large catalyst for this name. So the point is financial metrics are lining up with the business, which is also in high demand, especially with things like imagery associated with GPU technologies, artificial intelligence. And it's not just, DoD or Google, which this company has a partnership with. It really comes down to multiple industries are using, high efficiency satellite imagery for various reasons. And Planet Labs helps them generate that and generates a lot of revenue.
Futures starting to turn back up.
I mean, a pretty nice move, of course, today in response, and a nice place to leave it as we close out this Friday on a 25.7% jump in Planet Labs. Appreciate that, George Tillis, for all of that breakdown. And Alex, as we do check in on markets here before we go. We are still seeing, some consistent pressure. Not really any meaningful. Actually, we're seeing some further downside price activity from where we started the show.
Yeah, this is going to be a really interesting last couple hours of trade. I expect that the volumes and volatility will pick up into the close, but essentially the lows of the day right now.
Yes, we continue to see crude oil futures are actually continuing higher, up now 2.5% as the market drifts lower to close out this week. But that will do it for myself and Alex for Next Gen for this week long. Of course, thank you for tuning in. The watch list is coming up next.
Futures looks like a little short covering. Crude is still at the high. S&P, a little bounce there.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy. From the opening bell to the closing bell, we've got you covered. Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on ETFs.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute. With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing up houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Crude oil still ramping higher. Crude oil is not stopping. That's not good for the indices. Engulfing the body of yesterday's candle.
Good afternoon. Welcome to the watch list. I'm Nicole Petalides. It's 2 p.m. Eastern Time. Happy Friday to you. We're coming to you live from the floor of the New York Stock Exchange with a big show for you right now. We are seeing stocks under pressure. We're down for the fourth week in a row. We'll continue to follow the oil story, which is higher by about $3.50. We'll also check in with York Space Systems CEO on the company's outlook in the space sector overall. Crypto finds itself in a winter season. What does that mean exactly? And what kind of volatility can we expect going forward? In the meantime, we'll have our panel discuss gold and other precious metals in your future. Let's take a look here. As I mentioned, stocks are down for the fourth week in a row for the Dow, the Nasdaq, and the S&P. In fact, is down 1.5% at 24,005. The Dow is at 45,797, down 224 points, and the Russell 2,000, the small caps losing 40 points. In the meantime, as we look at oil and gold, it's really worth noting gold's selling off $27, but oil's right around $99, and it's come down in the last few seconds. Now it's 98, 68 over here. It says 97, so it has come down just a little bit, but still it's up 2% today, and that's enough to pressure markets, right? And you do see the 10-year bond yield at 4.38%. That is the highest level we have seen in some time, and Bitcoin 70,000 down 0.5%. Kevin Green's with us, senior markets correspondent here on Schwab Network, taking a look at the big picture, at the markets, at the levels. And I do think that the 4.38%, we have not seen a 4.3 in some time, right? I mean, we're getting closer to 4.5, so it's what's happening.
Yeah, if you're looking at the 10-year Treasury, it definitely broke above that 4.3%. That was a key area of resistance, pretty much that we've been testing and failing since January of this year. So this is the highest that we've seen the 10-year Treasury rates this year, and kind of going back to pretty much July of last year. So we are seeing acceleration. You are seeing an increase when it comes to volatility when it comes to that yield as well. That also creates equity volatility. You know, Nicole, when we're kind of looking at the price action here today, rightfully so, you are still seeing some selling pressure to the downside. We do have geopolitical risk over the weekend. You are seeing oil markets, for the most part, still catching a little bit of a bid. Now, over the next 30 minutes is going to be critical for the oil markets because we will then get to the open outcry settlement for oil. So I'm expecting actually volume to pick up here over the next 30 minutes as institutions kind of mark their books going into the weekend. And that, once again, will create a little bit of volatility for the equity market. Another interesting stat that I've been looking at is the amount of stocks above their 50-day moving average. Right now, we're only seeing about 23% of the stocks in the S&P 500 above their 50-day moving average. And that's getting close to.
I gotta put you guys on mute for a minute. I have to make a phone call. I'll be right back. Got to exchange credit card information. So let me mute you. I'll be right back.
here. Lockheed Martin and a Palantir. What kind of upside potential do these kinds of names have, and why are they included?
Yeah, so we like both stocks. Certainly, Lockheed Martin screens well. We're a quantitative investor, and we look at many different fundamental characteristics tied to valuation, sentiment, momentum, and so on, and financial strength. Lockheed Martin scores well on almost all of those criteria, all of those type of screens or models. And that's a really nice fit in the current environment. It is acting more or less as a hedge. But still, even if things improve, there may potentially be a better entry point. But fundamentally, it is a sound company going forward. And Palantir, as noted, really is sitting at the intersection of AI and national security. It's kind of like the operating system level for all of AI. So another stock that screens well, not necessarily on valuations, which do look very expensive, but in other elements tied to sentiment and macro type of trends. So we like that stock as well.
Okay, understood. For the smaller group, SMDX, and you look at mid cap, small and mid caps, is there a tech story here too? Because I know you've been looking at these names, for example, are not. I mean, Microsoft was very techy, but where does the tech story fit in? Is it in your large caps, small caps, what?
Yeah, I think it's throughout. When we look at the current environment, I would say we are in a productivity-driven environment, and AI is clearly a real earnings and cap story, but it's also a concentration story. So a meaningful share of index performance is tied to a relatively small group of names, and investors need to understand how exposed they are to that theme. And I think this year to date, we've been seeing that. To kind of give you an example, we came into the year where the top 10 stocks in the S&P 500 were about 40% of the index and closer to 50% of the total risk. So portfolios can look diversified, but still are highly concentrated. We've seen now that.
All right, crude is starting to back off a little bit.
Use Microsoft, the stock that we do like. Microsoft has now down about 20% year to date. So it's become more attractive given the recent pullback. But the bigger point is to diversify more intentionally, you have to really start looking at other names down in capitalization. That's looking at mid as well as small cap stocks where earnings revisions continue to improve. And even though there's been a lot of chaos and noise going on in equity markets, we continue to see earnings improve down in capitalization. So there's a diversification opportunity there to benefit from smaller stocks along with the larger names.
All right, Richard, it's great to see you. Thank you so much, Richard. Appreciate it. Richard Yasinchak, the Chief Investment Strategist at Intech. All right, coming up, we're going to take a look at the space sector, check in with the CEO of York Space Systems. Just released full year numbers, nearly 2 months after the IPO, and so much more. We'll be right back.
All right. So we talked about, if you're going to day trade today, what to look at, use your 1-minute chart, RSI. We also talked about crude oil needing to back off in order to start looking for potential bounce in the S&P. Now, this is a little bit of a pullback, but I'm talking about the daily over here on the right. So the daily. Now, let's say that doesn't interest you. You're just an investor, and what you're looking for is an opportunity to buy the next dip, what we're doing right now, the dip we're experiencing right now. I have a couple of things written down that I want to do. TRBCX is one. SPXL, the long S&P 500, looking to do some there as well. Okay, so TRBCX. Okay, you can see where we are. We've had this on the chart for some time now, starting to come into view. We made 176% since the first entry on this one at the end of the last bear market in 22. Okay, along the way, we, adjusted the position, took some off, put it back on. Putting it back on once we move back above the 10 EMA. Okay, looking for a bounce, however. So that currently we're down about 12%. 12%. Okay, we're looking for that. Looking for this move now. About 12.5%.
Tick alert -800.
Continue to move lower. Potential buy zone. Okay.
Welcome back to the Watch List. I'm Nicole Pettin, ladies. We're live at the New York Stock Exchange. Dirk Wallinger joins me now, CEO, York Space Systems. I'm so glad you are with us. We're going to talk about the quarterly report.
Okay, momentum clearing, pushing lower.
Right now, you have a somewhat volatile market environment.
Yeah, it definitely is a volatile market environment right now. Luckily, the vast majority of our business is in defense and commercial as well. But on the defense sector, right? I mean, that's not a need that goes away. Markets can go up and down, but our need to protect the U.S. taxpayer, protect U.S. citizens remains. So defense is a really, kind of a great place to be, even when it's a little more volatile.
Understood. Tell me.
She understands.
And,
Nicole understood.
Yeah, very exciting full year for us. Revenue was up 52% year over year from 24 to 25. Gross profit was up 133% between 24 and 25 as well.
Okay, so if you're a investor, we're looking for an opportunity to buy again. Okay, we could get a bounce near 186 maybe. Maybe just shy of that, but we're definitely watching for the first bullish week. The first bullish week, something like this right here. Okay.
What's going to continue to be important for us is to diversify the base and to diversify the customer base. On the earnings call, we were happy to report that we just secured a new commercial contract, 20-plus spacecraft, $187 million. It was the first constellation of many for this customer. So I think that pointed in a really positive direction as far as the diversity of our supplier base goes. It's actually our sixth commercial contract. In addition, we talked about two new IDIQ contracts that we won for two different.
Low tick alert -800.
Which both represent capabilities required for national defense and Golden Dome. So we continue to expand our addressable market. And I think that's probably
Extreme low tick alert.
It's certainly what we're excited about.
I mean, I think about the fact that profits that you've been growing, the margins that have been growing, the revenue outlook, that, your outlook has been on the rise when it comes to revenue, which increased 52%. How are you managing to do that?
Yeah, we've been in this game for a little bit. We founded the company in 2012, always with this vision. At that time, it was billion-dollar satellites built over decades. We had a firm belief that wasn't going to work for the future and our national adversaries that we were facing. So we invested, a decade and a half in proliferated systems. And so now we're really starting to see a lot of that benefit. So while a lot of emerging competitors are working on getting their first platform up and running or trying to transition to mass production, we invested in that several years ago. And so that's where we're seeing these improvements in the financials, is because we made those investments. We kind of took our medicine, for lack of a better term, and took that medicine.
Okay, we continue to move lower.
And so now we're really starting to garner those efficiencies.
I know you had an acquisition, Orbion. Tell me a little bit about Orbion Space Technology. Why does it fit into your umbrella so beautifully?
Yeah, so we have standardized platforms ranging anywhere from 200 kilograms to 2,000 kilograms. And Orbion built
first and deliver at half the cost. So really excited to have them on board.
Low tick alert minus 800.
And when you're talking about the contracts and stuff that you have, I mean, some are commercial. I guess some are more well known than others. Some are confidential.
Extreme low tick alert.
I know, and you have all these facilities and solutions. Which ones can you tell us about that we can really sort of sink our teeth into?
Yeah, so communications is seeing a lot of growth right now, and so there's a lot of missions that we're doing that are in that mission set, whether that is K-band, whether that's Link 16. So we're building lots of constellation systems there, and those tend to be mostly for national defense customers. We're also doing what's called remote proximity operations, so RPO missions, where those are satellites that go and inspect other satellites. So
All right. So we're getting close,
synthetic aperture radar. We're doing electronically steered antennas. So space is just a really exciting, time right now. One that probably I haven't seen in my entire career, where the technology is developing so fast. And as these technologies develop, people want them in orbit. They want that imagery. They want that information, those analytics to feed kind of these larger technology companies that are looking to basically feed all that information into their system. So it's really what we're really seeing now is just an explosion of technology that people want deployed from space.
When I think about supply chain and software, is everything going as smoothly as it could?
As smoothly as it could is probably the way to go on that one, Nicole. So supply chain is definitely much better than it was when proliferation kind of first started taking hold, probably about 5-8 years ago. We've invested heavily in the production and the supply.
Okay, nice little drop there.
That's part of some of the proceeds from the IPO or for building inventory. And the reality is that if you're not always ordering, at the second that you
NIMO is minus 82, minus 83. NIMO minus 82. That's significant.
quite frankly, I don't really care. What I care about is ready when I need it. And so that's what inventory does for you. It enables you to plan better.
NIMO is minus 83.
So that's kind of where we're at, and we expect that most of the industry will kind of move in a similar direction as well.
Okay, and as you lower the net loss, we've seen numbers on the rise, and you're a leading provider to the Department of Defense, right? And you expect that to continue, right? How so?
That's right. Yeah, I don't think anyone is making the argument that we're going to need less satellites in the future. I think it's obviously quite the opposite. We're going to need more and more satellites. We're going to need to replenish them more often, and the technologies are going to continue to evolve. Where once you learn something new.
All right, nice little bounce so far. Crude oil dropping off a bit. We need to see more of that next week. Okay, look into, you could always scale in.
All right, Dirk Wallinger, CEO of Space Systems. Thank you so much. It's really great to see you with us. York Space Systems, YSS, up 24% today. Thank you. Coming up, taking a look at crypto, what you need to know. What happened to the winter season? Do you see crypto surging or not? What might happen next? The experts take next. Kick off the morning with the data and the decisions moving markets. Morning trade live breaks down the macro moves.
Everything we do does not have to be constantly day trading or selling premium or swing trading. Sometimes, investing when the opportunity presents itself, like we've seen recently, where the number of stocks above the 20-day have reached a extreme low. 85% of stocks are trading below their 20-day. That's an extreme level that in the past is a pretty good barometer for or reference point for a reversal. Will it happen early next week? Hard to say. We're sitting right on the 200-day moving average now. S&P equal weight is sitting on the 200-day. The number of stocks trading above their 20-day has reached looks like 12%, 13% are above the 20-day. 87%, 87% are below. All right, looking for a little bounce here, maybe. Equal weight. All right, S&P equal weight. Let's go RSP. RSP. Okay.
Low tick alert minus 800.
All right, we'll continue to move lower. So they're going to wash this out. Wow. Wow, wow, wow. Pretty soon it'll be 90% or below the 20-day. All right. All right, Micron at the 20-day moving average. Micron is at the 20-day moving average. That pulled back. It's below yesterday's low, intraday low. Micron has great earnings. It's a matter of time. 15 times earning puts it about 550. So let people sell for now. People probably just accumulating cash, reducing exposure. Anyone that's been in Micron all this time, since middle of last year, most likely are taking some profits off. Makes sense.
Low tick alert minus 800.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X and connect with me on LinkedIn or Instagram.
Trading at Schwab is powered by Ameritrade, unlocking the power of your sweat. Your trading values. Bring your trades into focus. Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And track market trends up to the minute news and insights. Trade brilliantly with Schwab.
I'm Nicole Ladies. Joining me right here on the show, Anjali Bachchan-Pillai is with the Senior Client Portfolio Manager at Payday Asset Management. So glad you're with us as we're looking at what's going on. Is it shifting to something new? How is the shift? How would you describe it? You saw some of that in the existing market in particular.
Shifting towards this kind of advancement of technology, so many of the processes go a lot of appreciating right on that job.
All right, everything is down. No surprise. Next week, probably going to get some kind of opportunity next week, I would think.
We were talking about shifting from high to hard infrastructure and the applications for AI that go with it. We're seeing a great example of that.
There's nothing to do. The reality is we need to wait for institutions to show up. Okay, we'll let them do the heavy lifting. Once we see them,
Low tick alert minus 800.
then and only then can we start to accumulate positions, put on more risk. This should be pretty obvious stuff. I apologize if I'm boring you with it, but for the new traders, I wouldn't be putting any risk on at the moment. A lot of stocks
Extreme low tick alert.
will most likely bounce. Micron's a little disappointing. I took some calls yesterday. Got plenty of time for those. Micron, April. Should have taken a little bit longer out. Most of my positions are June. BP. Let's see, Charter. Okay, crude oil bouncing back up to the highs. No reprieve here.
Low tick alert minus 800.
Opportunities don't stop when the market day ends. So Schwab gives you unlimited access to over 100 of the most popular stocks and ETFs, plus a wide variety of futures markets. Always 24-hour support from trading specialists. Understand the ins and outs 24 hours. No better than our market. You can trade globally with Schwab. Hey, investors, you know the market moves. Schwab is here to help you win. So, whether you're buying, selling, holding, or planning, whether you're ETF, paying, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches, all at your service, so you can invest your way. Sounds nice, right?
I said live from the New York Stock Exchange with the market move. We're on it, getting the reaction from the analysts in real time. Stream Schwab Network and Schwab Network.
Low tick alert minus 800.
This is an opportunity right now. You see prices go down like $1,000 on the inspection. Silver's about $50 volatile time high. This is a massive opportunity for the long-term buyer, and I don't see here go back. It's we just don't even understand where the gold to silver ratio is. How many ounces of silver does it cost for 1 ounce of gold? We're looking at a little better than 60 ounces of silver for 1 ounce of gold. In 2025, the production rate, the actual supply and demand was 7.5 ounces of silver for every 1 ounce of gold. So how in the world are we sitting at a price ratio of 60 to 1? And so the math is the math. This is a thesis that is early right now and coming out. And so I believe that silver very specifically is the most undervalued asset in the entire world. And as the nations continue to spend and continue to buy gold, I just think that this is going to be a catalyst to see much higher highs than what we've seen so far.
I mean, to your point, we saw gold down about 10% this week, silver down about 15%. That's a huge opportunity here in this room.
All right, back up to the highs, S&P.
There's a couple of things I would add too. You look at silver in particular, and there's a huge investment using it this weekend.
They're talking about buying silver. Is that what they're talking about? Well, that's really weird. Silver. I hope everyone's having a good day. I'm your host, Cousin Benny, coming to you from theclosingprint.com. We're coming into the last hour of the trading day. Hard to believe it's already 3 o'clock.
We broke it down. So technically, we've got to see if we get confirmation over the next few days. But right now, the sell side, the bears, they're winning this race right now. We need to see if we recapture not only those October, November lows, but that 200-day moving average. Here's a fun fact, RBNI, if you will. Right? You know, we had 28
All right, back up to the highs. Crude oil. If you're thinking bullish equities, got to see crude oil roll over. Worst case scenario, it breaks out. But if it does hold in this box on the right, and we can manage to break down next week, if crude oil can back off and get back into the 80s, that would be good. I don't expect it to happen, but that's what we're going to need. We're going to need VIX to back off as well. VIX at 20, almost 28 now. VIX spiking up. Junk bonds still basing down here at yesterday's low. Um,
Low tick alert minus 800.
all right, we'll continue to show weakness. It's an Amber Alert. Amber Alert. Somebody's taking somebody. All right. All right, getting a little bounce now. I think we're really close to a bounce. Just need to see crude oil pull back in.
And Alicia, some might say, the U.S. is independent, oil independent at this point, energy independent. But there still is that same fear. There's this idea that, are we heading into another corollary like the 70s or even the 90s? How do you look at your portfolio or look at the market at this point in time? And is there anywhere that is immune from some of these oil pressures that we're seeing?
So I'd say the U.S. economy overall is more immune to the oil shock that we've seen. As Anastasia said, it is the greatest oil shock that we've seen ever. And yet markets are really not panicking that in the way that you would expect given that fact. So the U.S. economy is likely fine. I'd say U.S. consumers are not fine, particularly those who are on the lower end of the income scale. They will be getting right now, refunds from the IRS, which is going to help cushion this for now. Those will be over mid-April when tax season is over. But I'd say the real economy is going to hold up better in the U.S. than elsewhere. And the market, the oil market is still in backwardation. The VIX is still in backwardation, which is telling you it's keeping stability in these markets and the equity market for now. So everybody's expecting this to be over, whether it was 1 month a few weeks ago or 2 months now. There's an understanding we can get through this. And the question is, what's the tipping point? What's the tipping point where this goes
Low tick alert minus 800.
into consumer inflation, but then gets priced into everything else? I'd say the U.S. Central Bank is likely to be wiser than this, than the ECB, which, is looking at this as a bigger inflationary shock, and you want to make sure that they don't hike into this.
Yeah, just a quick point to pick up on. It's a great point about the backwardation of the Brent curve, for example. But if you can compare that curve to a month ago, that backwards looking or the forward looking strip, I should say, is looking $20, $30 higher than it would have been about a month ago. So I think the market is really grappling with the reality that because we have production outages, because we're drawing down inventories and reserves as we speak, we're likely to settle at a higher level of oil than before the war. So that's why, again, testing the resiliency of the portfolio is so critical right now.
Yeah, and Cameron, it's an interesting question, this idea that, the S&P has sold off since the conflict began, but not by as much as I think many would have expected with kind of Econ 101. And Goldman Sachs' Tony Pasquarello kind of tackled why that might be. And he said, maybe the stock market is complacent. Maybe it's saying the conflict won't last long, as Alicia pointed out. Maybe it's saying the U.S. economy can tolerate oil trading over $100, or maybe it's saying the world is a better place in the absence of structural state-sponsored terrorism. What's your take? And How should we be thinking about all of these different reasons as we watch the markets as this conflict unfolds?
Yeah, I think the most surprising stat that we can point to over the last 3 weeks is that analysts have actually raised their forecasts for EPS for 2026 and 2027, which is surprising in the context that we went into this energy price shock with already very high estimates of about 14% growth. So you could either say that markets are interpreting that as being that this energy shock won't hit corporate earnings, or you could interpret it as complacency. We tend to think it's a bit more of the latter. The reality is that 14% growth is consistent with very strong GDP, but if you are continuing to see this energy price shock get sustained, then the current forecast for GDP at 2.5% is just far too high. It's good to remember back in 2022, what we saw is that individual consumers saw their overall energy spend go from 3% to 5% of income. That was enough for analysts to completely revise out forecasts for household consumption growth. You're still sitting at about 2.3% estimates for household consumption right now. We think those have room to go down. So GDP down, EPS down, which just likely means that we could have more risk asset, so equity and credit market volatility.
And Anastasia, looking at the biggest laggard on a sector basis year to date, it's financials, which many people see as a barometer of the broader economy and expectations about how this economy will hold up. I know you've also been paying attention to private credit. Yeah. Theoretically, higher rates should be helpful there, although it is floating rates, so you have to start to wonder maybe a little bit more about credit quality. I'm just curious how the geopolitical environment changes the base case for financials, whether it's capital markets, whether it's alternatives and the like.
Right. It's a great question, a lot to unpack there. First of all, interestingly enough, private credit, the publicly traded BDCs ETF, has actually been outperforming amidst this whole environment. And I think part of the reason is because the Fed expectations for cuts are unwinding and for hikes perhaps increasing, not our base case, but I think that's what that private credit ETF is trading off of. The other thing I would say on private credit, coverage ratios have actually stabilized and have improved quite significantly since 2022, 2023. So I think we're in good shape there. We can spend a lot of time in talking about private credit fundamentals, which I actually think are improving at this point and not the other way around. But to your core question, which is about the financials markets, look, financials move on the expected capital markets activity, which we're expecting IPO and M&A volumes to rebound by 36% or so this year. Is that trend still intact? I think that's the question mark for financials.
Still moving lower, huh?
Discussion that we're having.
Junk still moving lower. S&P lower. Repeat of what we've been seeing all week. Price action stays below VWAP all day.
Terminals are globally as well outside of the Middle East. So, for investors, it's hard to find any winners in the market in a war like this, but energy infrastructure stands out as one area of resiliency.
And Alicia, of course, Anastasia mentions the consumer as well. And we are, believe it or not, less than a month away from the start of those bank earnings seasons. So we should get a decent read on what's happening, at least across
low tick alert minus 800.
How quickly does higher oil prices seem to affect the consumer? How big of the lag is there usually there in terms of what it means for the consumer-sensitive stocks that you're looking at?
So look, we're seeing it now. But people are seeing it at the pump right now, and that's pretty quick. And that you're going to see consumer sentiment also drop. The only thing I'd say here, consumer sentiment measures and consumer confidence have been a terrible indicator of actual spending and where stocks are going and where the S&P is going. So it's a big conversation point, and I don't want to minimize it, but there is support to the household sector right now because of one big beautiful bill, and so the timing happens to work out very well. As it relates to big banks, we actually like big banks here, and we would have our shopping list ready. I think that there has not been sufficient downdraft in the markets yet. This is not Liberation Day of last year
but certainly this is a moment where things are getting re-rated, and we like big banks here because of the deregulatory picture. There has been some flattening of the yield curve. We expect that to change. We will see some inflation get priced out later on in the year, bring the Fed back in, re-steepen the yield curve. So we would just have our shopping list ready, and large banks are actually on that shopping list.
Yeah, and of course the big banks went up so much last year, and not helped by that flattening yield curve, but those things can be temporary. Cameron, how are you thinking about just this world in which a lot of the cuts for the year are priced out? There's even the potential, at least in terms of the futures markets, for a hike out there. How does that change portfolio allocation? How should investors be thinking about it?
Yeah, a 40% chance of a hike by October is very different than the expected cuts. And I think we have to appreciate over the last 2 years, we've gotten 150 basis points of rate cuts. And these have been good news rate cuts. The idea that the Fed can be cutting rates, but we can be raising GDP and EPS forecasts, which meant that the Fed was cutting for a good reason. Inflation was moderating. I think that there's a higher probability that when we do eventually get rate cuts, it will be for the bad reason, meaning that we will be seeing growth forecasts getting cut, we'll be seeing more weakness in employment. So the environment that we have been in, where we had a downtrend in the 2-year yield expecting cuts, and we had an uptrend in earnings estimates, meaning that the economy and overall corporate earnings power was strong, we think that the combination of those two things are effectively behind us, meaning that we have now this uptrend in 2-year yields, or at least we're above our 200-day moving average. We think that there's downside to EPS growth. So again, it all comes back to this idea that we could have more volatility within equity markets, which are still trading at about 21 times forward. So don't be surprised if the volatility continues, even if we are oversold enough probably at the end of today to see a short-term bounce.
And Anastasia, I see you don't expect the Fed or the ECB to hike rates in response to the oil prices that we're seeing. Are you concerned at all about stagflation? That word is being thrown out there again.
I mean, yes and no. So first of all, I'm really glad that you picked up on the rate cut conversation because, one thing that you see when you look at inflation expectations, the forward-looking five-year inflation expectations are actually declining in the United States. And I think Cameron's is spot on that if the Fed eventually, once again, cuts rates, it might be because they're worried about the labor market and they're worried about the price of oil being a consumption tax, therefore slowing economic growth. So you couple that with those inflation expectations that are in check, and that's why I sort of go against the market odds here rising. I think the Fed is still very much in rate cutting mode. Now, for the ECB, it's a little bit different because their inflation expectations have actually picked up. But once again, they're hit with oil and natural gas. I hope the ECB does not go down that path. So, so my base case is not for those rate hikes, I should say, to materialize.
Yeah, and of course, mid-year, you could be looking at a new regime in charge of the Fed as well. So there are a lot of macro cross currents at this point in time. Anastasia, Alicia, and Cameron, I really appreciate you guys breaking it down for us today. Meantime, we are following a developing story, a fascinating story on Supermicro. That stock plunging down 32% today. Christina Pretznevlis here with the details. Christina.
A web of lies, dummy servers, and yes, a blow dryer. That is the alleged scheme federal prosecutors just laid out last night, charging 3 people tied to server maker Supermicro. Why shares are down 32%, including the co-founder, Wally Liao, who was conspiring to illegally divert billions in AI servers, specifically to China. So prosecutors are saying the scheme routed servers through a Southeast Asian middleman to China, with defendants staging these fake, non-working servers, thousands of them. All of these boxes are all fake, just ahead of any potential audits. And then caught on camera are people using blow dryers to swap labels and serial numbers. These are, for example, the woman on the right is holding a red blow dryer. And more than $500 million diverted in a single 6-week window just last year. And about that co-founder, Wally, he resigned from Supermicro amid an accounting scandal back in 2018 that led to the company's delisting. Then he was later rehired. Now this. NVIDIA is not accused of any wrongdoing. Supermicro says it's not named as a defendant, but analysts are just questioning how deep the compliance failures go, especially after EY resigned as auditor just in 2024. Supermicro we see down about 32%. Competitor Dell is up over 2% right now because the street is just seeing it as an alternative to Supermicro if things were to get worse.
Yeah, that was my question, Christina. How binary is it, for super
S&P continues to fade. No one's buying down here.
I mean, the reaction earlier today was up more than 6% on some of these headlines.
Yeah, but we're seeing it just decline with the overall with the markets. But Dell's excellent example. HP would also fall into the category. However, HP is really transitioning more towards a networking company, which is probably why you're not seeing as of a positive reaction in the stock compared to Dell. But it seems like with Supermicro, it's only, well, I shouldn't say it's only getting worse. I can't predict anything in the market, but this is just another negative story about this company. It delisted back in 2018 over accounting issues. There's just been numerous stories that have been named in other smuggling cases too by the U.S. government. So, down 46% in the year, but just down 32% just today. It's incredible.
Yeah, the moves are pretty remarkable there. Thank you for staying on. Just really, truly a fascinating story there, Christina. We are just getting started. Up next, more on this late day sell-off in tech, big technologies. Alex Kantrowitz is standing by with his take. We are live from the New York Stock Exchange. You're watching Closing Bell on CNBC.
All right. Wow. Quite the sell-off this week. Should be looking at most stocks oversold by Monday. Just looking at these put flies. Probably going to take the rest of these off. Let's see. Maybe leave a couple on for Monday. 64. 64. Okay. Okay, those are $12.45. Those are going for $12.70 right now. The April 17s, let's see what those are going for. April 17s. All right. I'm going to exit some of these March 31st.
So while
Anthropic's dispute with the Pentagon plays out in court, Google appears to have been making its case behind the scenes as a steadier defense partner. Now, according to the New York Times, during that February fallout over AI and warfare, Google Cloud CEO Thomas Kurian met with Pentagon tech chief Emil Michael to pitch Google's AI tools. That shift is already paying off. Google won a contract this month to deploy AI agents across unclassified networks, with Michael recently saying that he has high confidence that Google will be a great partner on all networks. And Google has already been moving in that direction, with BI reporting that in a January DeepMind town hall, CEO Demis Hassabis told staff that he was very comfortable with Google leaning further into national security work after Alphabet removed a prior pledge against weapons and surveillance from its AI principles last year.
Mac, how much of this is just experience and obviously Google being around for a longer period of time?
That's so much of it, right? And it's also a complete 180 from 2018 when Google employees basically forced the company to drop Project Maven, the Pentagon drone imagery contract. It's obviously evolved since then. And at the time, the company said that it wouldn't build AI for weapons, but now they've stripped that language from their principle, and Google's reportedly actively pitching expanded partnerships. But what's different this time around, and why perhaps they're making certain concessions they haven't in the past, is the fact that there is a lot more money at stake, and it's a fiercely competitive landscape among these Gen AI names.
Yeah, it's certainly a whole new world on that front. Mackenzie, thank you so much. Appreciate it. Let's bring in big technology founder and CNBC contributor Alex Kantrowitz. Alex, thank you for being here this Friday. What do you make of
low tick alert -800?
Wow, they're gonna stretch this to the downside for sure.
and the various chess game that's taking place?
Well, there are billions of dollars at stake. Anthropic, when I talked about the loss that it could take by being cut out by the Pentagon and other government agencies, put that in the billions. And so Google clearly sees that opportunity. And this is a critical moment because the government is very slow at implementing
Extreme low tick alert.
urgency there to adopt
Wow.
Gen AI players.
Wow, they're really doing it, doing a number.
Dollars that are currently at stake, but you could stay entrenched for a very long time. And even if Anthropic does win its case against the Pentagon and gets this supply chain risk designation thrown away, it's going to have to claw its way back into every agency that's in the process of ripping it out right now. And in could come companies like Google and companies like OpenAI. And that's why you see this maneuvering that we're seeing today.
How much of this is political? Do these types of contracts shift under different administrations?
It's highly political. I mean, we clearly see that with Anthropic and the Pentagon. I think you're seeing that with a lot of Silicon Valley coming out and supporting Anthropic and saying, look, maybe the Pentagon, if it doesn't want to buy Anthropic products, it shouldn't. But it shouldn't punish it the way that it has with the supply chain risk designation. And that could really have cascading negative effects for other companies working with the government.
Right.
So certainly we could see, let's say, the next administration comes in and Emil Michael, who's running this project for the Pentagon, he leaves, somebody else comes in, they have a fresh slate with Anthropic, they could come in, or maybe they could even kick out the current vendors and put Anthropic back in. So there are all these possibilities at play. The one thing I'll say is governments move very slowly. So once you get the Pentagon used to using, let's say, OpenAI's technology in warfare, then it's not going to be very quick to remove that for something else just because the political allegiance is there, which is what makes this Anthropic move so dramatic. The only reason they could really do it is because we're so early on in the process.
Yeah, that's what I was going to say. You think of kind of like the types of customers and who is the stickiest. I would think it would be the government, but at this early juncture, relative to enterprise and consumers, it seems like anyone's game at this point. I want to ask you about another story, which is this Wall Street Journal piece about Jeff Bezos in talks to raise $100 billion for an AI manufacturing fund. That is a huge fund, because it sounds like, based on the reporting, citing people familiar with the matter, that is he is corralling people together to raise that fund, which would be one of the biggest funds out there specifically for AI manufacturing. What's your take on that?
It's a big deal. I think this could potentially be the second biggest thing.
All right, taking the last of these, March 31st.
He's someone that's definitely seen the potential of automating different things in the industrial world. Think about the Kiva robots that he brought into Amazon fulfillment centers and the advantage that he was able to exploit with them. You think about Amazon versus the competitors, they're still going to get you stuff faster, and that enables them to offer products in a less expensive way. So I think if Jeff Bezos can take a next level of technology we're seeing today in the AI world and apply that across the board while putting money in, that could give companies throughout industry an advantage over their competitors, and he can make a lot of money. I mean, it's definitely a trillion plus opportunity.
It's a good point. You think of Amazon and the innovation there as being e-commerce, but it really is logistics. It's the warehouses. It's the ability to get things to you quickly. What do you think this means for just the kind of the stack, the technology itself? If there is so much money being put into this world, what does that mean for AI demand and their ability to do what they need to do?
Very good time for AI demand, because I think AI is going to do well if there's a diverse set of use cases. Not just the chatbot, not just the engineers using things like Claude Code, but if you get it involved in industry. For instance, let's say you're running a factory, and most factories and most industrial spaces are highly computerized right now, but a lot of that decision making.
All right.
And if you could get faster decisions, because let's say a Gen AI model is monitoring everything all the time and sees an anomaly and brings it to the attention with a suggested action to a manager of a plant, that could be huge. It could be a way to.
We consider taking some of these put flies off.
And then they're going to want even more of this technology, which means ultimately more money for the Gen AI companies. Yeah. So it's very promising. If you're an OpenAI, Anthropic, and NVIDIA, go down the line. Good stuff for them.
Yeah, and I guess there is another question, which is what happens to the manufacturing related real estate that used to do old school manufacturing and the jobs and so forth, and now it's going to be converted into these types of warehouses if he is successful in raising that capital.
Big question. And the one thing I'll point to is Amazon, after they brought in the robots, still has hundreds of thousands of humans inside those plants. There's always a but here. The but is for now, right? And we're seeing that in the warehouse specifically. Robots are getting great at picking items out of buckets, which is sort of the last in these warehouses. So we could end up seeing a pattern where employment spikes because these companies do better, but then they find a way to automate that extra employment, and then it goes down. And that could ultimately lead to real crises in our economy if we end up automating some of the core jobs that make the economy work.
Absolutely. And there may be
Crude oil, watching crude oil.
warehouses, but over the long run, what does that all mean? Alex, thank you for being here.
Probably going to be a bounce soon. Remember what April felt like.
Holding in the green for most of the day, but they've just given up their gains. We'll break down the move with top banking analyst Gerard Cassidy. Composing Bell will be right back.
Okay, that April pivot where we hit that low. Okay, you didn't have to enter the first day. First day or two, even if you missed the first day or two. Our little patience, waiting for. Be nice to see. Be nice to see. Looking for a 10% move out of this dip minimum. That'd be nice. I think Tom Lee has 7,300, I believe, right? I know people are tired of Tom Lee. I could see why you might scoff at the idea of 7,300.
Low tick alert minus 800.
Welcome back. We are getting some news out of the sports world. Mike Ozanian here with those details. Hey, Mike.
Hey, Leslie. Great to be with you. Steve, Jonathan, and Lori Tisch are looking to sell their combined 23% of the New York Giants to their children. This deal would value the New York Giants at $10.8 billion. Just go back a few months ago, Pope bought a 10% stake at a $10.3 billion valuation. So we're seeing the continued rise in NFL team values. And just recently also a 1%
Extreme low tick alert.
Miami Dolphins was sold for a little over $11 billion. So the rise in NFL valuations, which are really being driven by the expectations of this next media rights deal, which our Alex Sherman reported are likely to see at least a 50% increase, driving those valuations much higher.
Yeah, Mike, truly eye-popping figures there. Thank you for sharing those details with us, Mike Ozanian.
Thank you.
Still ahead, more on this late day sell-off as we head into the closing bell. We'll be right back.
Low tick alert minus 800. Extreme low tick alert.
Oh man, that's nice. Ursel, that's nice, man. Oh boy. All right, let's take a look at 6,500. When did that come in? Okay, that came in about around 2:30. A lot of gamma came in right here. People shorting. So on the move lower, you know that the dealers have to sell futures. Hence the plunge. Wow, I didn't think we'd get to 6,500. Yeah, I'd be thinking about buying some stuff down here.
Thank you, Leslie, for having me on the program. And I think, Leslie, this is
Oh boy.
last year. You might recall last year we had the tariff stories that were going to lead to possibly a recession in 2025, which the bank stocks last spring from the peak right at the beginning of the year until the bottom, they were down about 22%. And year to date, the stocks are down about 13%. And it's really all about will this military issue in the Middle East between the U.S. and Iran, will that lead to something even worse later in the year? And if it doesn't, then this is a really good buying opportunity because we think the underlying structural U.S. economy is still very healthy, which is very positive for the banks.
Now, we had the David Solomon annual shareholder letter today, and he seemed very constructive on the possibility for more strategic transactions. But I have to wonder, given what's going on geopolitically, given financing conditions could be tighter than maybe we initially expected going into the year, as well as some headline risk involving private equity and private credit, as sponsors were expected to be key drivers of the capital markets revival in 2026. How confident are you that all of those things can kind of fade away and this revival that we've been expecting and hearing about, record-breaking numbers for 2026, that will actually come to fruition?
No, you're absolutely right. In his letter, he is constructive, and obviously the activity ebbs and flows with the geopolitical environment, especially when it comes to ECM activity, IPOs this quarter are obviously down from the fourth quarter levels. But again, if we get to see some calmer markets once the Middle East situation calms down, I think what you'll see is that this activity will pick up. And it's not just from the sponsors either. Strategic M&A is very important. This administration is very supportive of consolidation in many industries, including the banking industry. And that, of course, is going to, I think, be beneficial for all of the M&A activity for the remainder of the year. It's also similar to 2022, of course, when Russia invaded Ukraine in the first quarter. The investment banking activity suffered. The markets were quite healthy. Market revenues this quarter should be quite good for all the players in capital markets.
All right. Nice bounce there, Paulo. Good job.
Yeah, trading has had a few good quarters now, and this one should be no exception. I agree with you there. In terms of regulation, we got a slew of proposals really yesterday regarding Basel, regarding the G-SIB surcharge, and other areas that all seemed net pretty positive for capital levels. According to officials, it should mean about $20 billion in excess capital across the largest banks that could could be returned in the form of buybacks or dividends or loaned out or reinvested into the business. But the stocks didn't really move on this news. Was it already priced in? Is it, is there still some uncertainty about what it really means for the banks?
Leslie, you're right. It's a net positive for the banks. But one of the real positives.
All right. Nice little bounce off the low. Not much to look at. All right. I got a hard stop at 4 o'clock. I have to go meet my daughter at Midas, get her oil changed. So, yeah, I'll be leaving here right at right at 4 o'clock. Okay, so if you feel, I don't know, if you have a negative take from this week, obviously it's a pretty bad week for anyone who stuck with longs and didn't take any profits or didn't have any hedges or whatever. We will bounce. Short term, we're so oversold now. You know, institutions are looking, if they haven't started buying already, be looking for a bounce and a follow through. Micron, I'm thinking that's going to follow through. I think Applied Materials, Lam Research, ARM Holdings, a lot of stocks are going to be moving higher next week. So we'll have to wait and see how the market starts out. But yeah, it should be good. Short term, don't worry too much. Things will be fine. This is the opportunity we've been looking for months. I didn't think we'd get down to the 200-day. 3 weeks ago, 4 weeks ago, I thought maybe the 50-day was going to hold. I thought maybe 6,700 would be it. No clue that 6,500 was in the cards. So just shows you, you never know. 60, wow. JP Morgan collar is 64.75. Wow. So we'll probably be doing something soon.
Yeah, I mean, this one's really struggled, hasn't it? I mean, over the last year or so. I think it's down about 30% or so in the last 12 months. I'm just wondering, what you attribute that over the course of the time to, and also, as you say, some of the competitors, how it sort of stacks up against the others. I mean, obviously, we're just talking about Chewy, a little bit different in nature as far as that business is concerned, obviously, because that's more of an online store. It covers a lot of other stuff, just away from, just dog food, for instance. But just walk us through anything else that sort of stands out about this one.
Well, I think what's unique is their brand and their product. It's a specialty product. It's rather expensive because I purchased it sometimes for my pet. But with that said, you can see their refrigerators and grocery outlets. They stand out, and I think that's a niche. And a lot of times, these standout brands and their placement of product allows them to have pricing power. I just think what's happening here is that, generally speaking, because of the total addressable market for fresh pet food is increasing, fresh pet has been growing, but it's been growing now less than it has in the past, but its margins are improving. So that's the inflection point I think that Oppenheimer is looking at going forward. And again, if you look at the earnings multiple for next year, it's around 31 times earnings. But if you look at their EBITDA growth, it's around 18%. So it's growing at less than 2 times its EBITDA growth. With, again, the digital sales improvement, and that's why I brought this up just a moment ago, that number actually increased by 40% last quarter. So they're making a huge push in digital. That's more scalable, more cost-effective sales, let's put it that way. And that's, again, more margin enhancing to the bottom line, and that's, again, the catalyst that Oppenheimer's looking at here. All right, S&P is rallying. Nice rally off the low.
This week, I think, George. Thank you so much for that. Have a wonderful weekend. We'll catch you next week.
7 minutes to go.
Well, we're nearing the end of the market's week. The bell's just under 10 minutes away. Kevin Green's going to help us break down the levels he's watching.
Yeah, I think it's time to buy as well. Absolutely.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Crazy, crazy. All right, so we're starting to get a nice little rally off the low here. VWAP Possible. Possible. All right, Paulo, good job there. We got a minute and 40 seconds to go. I got a hard stop. All right, Bitcoin bouncing a little bit. Maybe we get a follow through next week. Actually, it trades Saturday, Sunday, so I wouldn't be surprised to see something tomorrow. All right, I'm out of here. Have a good one, folks. I'm your host, Cousin Benny, coming to you for theclosingprint.com. It is Friday, the 20th of March, 4 p.m. I got to get out of here. Take care. We'll see you on Sunday for the weekend video.